monetary policy independence and not get trapped in the trilemma. If you were to look at India's policy interest rates over the US interest rates, they used to average about 400 basis points. And the fact that we've exhibited independent monetary policy is reflected in the fact that that differential has now come down to half those levels. So I think the RBI, the fact that we have these bazooka of capital flows coming in will insulate the external sector. It will insulate the external sector both if oil prices go back up. I think currently the market's a bit oversold. You're seeing this glut of oil come out of the strait and crude prices are at 72, 73. But I think we should not take too much comfort from that because inventories around the last 3 months over the world have been run down very dramatically. And at some point, those inventories will need to be replenished. Demand for crude will go up and crude prices may well go up back to $80. But be that as it may, even if crude does go back up another $10, the fact that you've got these capital flows insulates you both from a widening of the current account and insulates you from US rates being elevated, which will suck out capital from emerging markets. So I think, therefore, the measures on June 5th were important because A, they changed the expectations and they bought us 1 year on the balance of payments. Monetary policy can therefore look at domestic growth inflation dynamics. I think the risk from energy is much lower. I think the key risk that's hovering over us, I spoke about 3 risks. One was West Asia, one is US interest rates, the third is El Nino. And I think there's now, a 2/3 chance that we get a super El Nino year. So I think the RBI is correctly being patient that an adverse supply shock like El Nino is going to affect both growth and inflation. Typically, central banks don't respond to temporary supply shocks. They will respond if food inflation is high enough and long enough that A, it affects inflation expectations, and B, or it spills over into core inflation. So I think if those criteria are met, that later this year, core inflation is picking up, this is becoming a more generalized inflation because of food and fuel, then the central bank responds. If it's a 3-month, 6-month food shock, you tend to ignore that.
Okay. So, Sajid, let's assume that the central bank will have the ammo and the muscle and the ability, even if US were to hike, to not go out with large hikes because maybe the demand drops off because of the super El Nino that you mentioned. But at the start of the conversation, you also mentioned that this is the window, the bridge that we have to take some steps to build out longer term moves, right? One of the things that you mentioned was encourage private capex. How does the government do that? They've been trying various means for the last 4 or 5 years or maybe longer to do this. And say for select sectors, we really haven't seen private capex happen in gusto. There are individual groups and individual sectors which are doing that.
That's right, Neeraj. And I think it's important to understand what the binding constraint is. As we've discussed in the past, my sense is that for the first time in a long time, the binding constraint is actually being demand visibility, not the supply side. So balance sheets are clean, profits are strong, cash levels are high. In a world in which China's got so much excess capacity, it's understandable why Indian entrepreneurs will want to see more demand visibility. 2 or 3 signs of inadequate demand visibility are, core inflation has been stuck at 2.2%. That's really good for the consumer, but it's telling you that the firm doesn't have much pricing power. Capacity utilization for manufacturing is still at the 74-75% range. One will argue that in a world with so much excess capacity with China, the Indian firms need to see higher utilization rates before they start investing. So what's needed is a demand push, and to the government's credit, there was multiple instruments used to push demand in 2025. You had 150 basis points of rate cuts. You had regulatory easing that was meant to act as a force multiplier. We had direct tax cuts in February. We had GST cuts in September. And the economy did see a cyclical pickup, in the last quarter of 25 calendar year and the first quarter of 26. And the worry was that this shock would interrupt that momentum. Now, the good news is the shock is behind us. And therefore, Neeraj, the hope has to be that cyclical pickup that we're seeing continues for the next few quarters. Consumption broadens. This is where El Nino remains a big risk. Let's hope and pray that El Nino is not as acute as feared, because the last thing we want is more shocks. In the last 6 years, we've had a COVID shock, you've had two wars, you've had a tariff shock from the US, we have an El Nino shock. So we need to get through a period of a year where there are no more shocks, and the cyclical impulses that we saw in the last year continue in motion. Credit growth is still holding up well. If you look at retail auto sales in June, they're holding up very encouragingly. So the hope is if growth holds up in the next 6 months after the shock is abated, will that be enough to drive a private capex or cause private capex to pick up? One last thing I'll say is there is another choice the government will have to make. It's important that public investment keep pushing to try and crowd private capex in. Last year, we saw that, central government public capex fell off sharply because there were other pressures. So it's important that this year, we keep pushing on the public capex pedal, and you hope that the tax cuts and the rate cuts from last year all combine to keep demand healthy enough to crowd in private capex. That, I think, will have to be the strategy. There's no other magic bullet, because the constraint here is demand. One very final thing I'm saying is demand comes, if you think about GDP as being consumption, investment, government spending, exports. Government spending's done the bulk of this. It now has to slowly retreat. Demand has to come from consumption and exports. We've spoken about consumption. Another push will have to be keep signing free trade agreements, get into larger mega regionals, bring import tariffs down, bring QCAOs down. If you can generate more export demand for goods, then we're getting that much closer to a private capex cycle. Let's not forget, the last private capex cycle we had between 2006 and 2011 was driven entirely by export-led growth. Exports were growing at 16% a year for a decade. It was that demand visibility that caused private fixed capital formation to pick up. So you need some combination of consumption and exports to fire for some length of time to crowd in private capex.
So, Sajid, just very quickly, and it's amazing to see you so passionate, in the way you explain all of those concepts. You talked about El Nino, I think 4 or 5 times in the course of this interview, and clearly it's a source of worry. Now, instead of just hoping and praying that things pick up in the second half, like they did in 2019, where August and September more than made up, what can be done at a policy level to cushion the shock that could possibly come?
So I think the starting point here is that buffer stocks for rice and wheat are very comfortable, and that should give us some source of relief over here. Of course, the risk is going to be pulses and vegetables, which are a much shorter cycle crop. Pulses have flared up in the last 2 El Ninos we've had. The problem is you can't. You can try and diversify imports, and that's the obvious response. But because India is a price setter and a price maker in the global pulse market, given the quantum of production, if we have a bad crop, then that will affect global prices as well. And it impedes your ability to hedge by importing from abroad. I think, the sense is if we have if the Kharif crop is inadequate, India can maybe get through that. The worry is if this is a super El Nino that drags into 26 and 27, and you have back-to-back bad harvests of Kharif and Rabi, then the pressures will rise. But let's hope that the rain gods, the world has had enough shocks in the last 5 or 6 years. Let's hope the rain gods, will not add to that.
It's true, Sajid. I'm being told by my director that we're out of time, but I do want to slip in one last question. And that has to do with the fiscal deficit. You said that the government must push, but it has already tightened the belt and it has taken a bit of the blow of crude oil prices. Yes. Would there be a little bit of flexibility from the perspective of the investor, particularly the institutional investor looking from outside in, if that fiscal deficit were to slip?
I think so, because I think the important part is to embed that into a medium-term framework, which is what India has been able to do. And it's important that we reinforce that framework. And the framework was, we're looking at combined public debt. We want to stabilize public debt and eventually bring it down. The center has given us a roadmap to bring central public debt down. I think it's important to keep emphasizing those principles. Now, one other complication, I'll just take a few seconds, is that nominal GDP in India has actually come down. It's no more the 13-14% that we used to see, a decade ago. In a way, we've become a victim of our own success because inflation has come down, the GDP deflator is lower, nominal GDP is down. When nominal GDP comes down, then you need more primary deficit consolidation to bring debt down, because R minus G becomes less favorable. So my sense is that this will all depend on the context. Later in the year, if the government needs to push on public investment and there's some modest slippage in the deficit, as long as we explain that this is an aberration, there's a medium-term plan to bring deficits and debt down, I think investors should be willing to look through, because this government's had a very good track record on fiscal discipline, and risk premia, in bond markets have come down. So I think that's a decision that should be taken later, that if crude prices come down, what is the burden sharing? Will retail prices come down? Will excise duties be increased by the government on OMCs, or will OMCs recovery? And my sense is, just as the initial shock was spread across these three instruments, the relief also should be spread across multiple instruments.
Sajid, absolute pleasure as always speaking with you. And I'm going to go back and listen to this interview because so much that has to be unpacked. Thank you so much as always for taking the time.
Always a pleasure. Thank you.
All right, well, that brings us to the end of this edition of India Market Open. It's been a great one. And from Tamanna, Neeraj, myself, and the team that put the show together, thank you so much for watching. Stay tuned. Up next is Ask Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो बंटवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
the news, Ayush.
Since when do we do scripts?
Fair point.
Picture this. The biggest stage. Floodlights. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of real. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Crypto markets fall on Bitcoin-led sell-off. CBOE weighs perpetual Bitcoin Ether futures. Digital Euro passes key parliamentary vote. Bally Gifford launches UK's first native tokenized fund. Well, the Bitcoin has dipped below that 60,000 mark, and this is due to the longer liquidations coming in. But of course, a little bit of stability is back. Now, do watch out for the stabilization in the funding rates and a reduction in liquidation volumes, which might signal selling exhaustion. Now, the upcoming July 1st deadline for the European Union crypto firms to comply with MiCA rules is something to watch out for. CBOE is exploring turning its Bitcoin and Ether continuous futures into perpetual contracts after the CFTC approved similar products for Kalshi, but it has not set a timeline. For the institutionals, CBOE is Chicago Board Options Exchange and CFTC is Commodity Futures Trading Commission. Now, the perpetual futures, unlike the traditional futures, have no expiry and rely on funding payments to keep prices aligned with the spot market. The European Central Bank ECB has secured a victory after the European Parliament's Economic and Monetary Affairs Committee has voted to approve the framework for a digital euro. The committee also mandated the immediate start of negotiations between European Union member states and the Parliament to hammer out the final law that will govern the digital currency. Bally Gifford is the Edinburgh-based independent asset manager which was founded in the year 1908, has launched the Bally Gifford Enhanced Lead Fund. Now, this is of course in partnership with BNY, making it the first publicly available fully native tokenized fund, which is of course regulated in the United Kingdom. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, majority of these currencies or the cryptos have actually seen a fall. Bitcoin, Ethereum, XRP, Solana all falling between 3 to 4%. And if you look at the important support and resistance levels, that has shrunken and gone to the lower side for most of these coins. Also, 60,000 is the support for Bitcoin and 63,000 comes in as a resistance right now. But now, time to take a look at the crypto strategy for the day on Crypto Decoded. Here's what to keep in mind today. Looking at the overall crypto strategy, the market outlook remains under bearish pressure. Of course, the risk-off sentiment which is there, that is actually getting impacted. The immediate support level, that's around $60,000 for Bitcoin. But remember, the sentiment may improve after MiCA transition comes in at least on July 1st. And also one important key thing to watch is the inflation data, which will be coming on July 14th. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome back. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajan, and with me is Soumit Sarkar, and this is a show that gets all your stock-related queries answered. You can either send us your queries on the WhatsApp number that's flashing on your screen up there, or also give us a call. Ask your queries live on the number that's flashing on your screen up there again. But while you do that, let's take a quick look as to how the markets are doing. The Nifty 50 has sustained the levels above the 24,100 mark, up by about 0.6%. Let's try to pull up the heat map and see as to what the counters are doing in trade today in terms of where top losers go. Hindalco, yet another day of pressure coming in for this one. Titan also seeing a downtick for around 1.8%. Power Grid, Coal India, ONGC are some of the other names that continue to be under pressure. But on the flip side, you have counters like Interglobe Aviation for second day in a row doing fairly well, up 4%. Max Health also up 3.7%. Maruti Suzuki, Mahindra, Dr. Reddy's, Shriram Finance, Bajaj Auto and State Bank of India are some of the other names that are doing fairly well. Bajaj Auto back in the green for the day. The other one, let's try to pull up the Bank Nifty. It's hovering around the 58,400 levels as we speak. About 0.5% of gains is what we're seeing on the Bank Nifty. Let's try to pull up the sectors as well. In terms of where the sectoral action goes, you have Nifty Auto leading the pack. In terms of where the entire sectoral heat map goes, you have consumption and realty following those gains as well. But on the flip side, metal seeing a downtick of around 0.9% and energy also slightly in the red. Let's also try to pull up the mid cap 150 and the small cap 250. The broader end of spectrum is almost in tandem with the benchmark. In fact, slightly underperforming the benchmark for the Nifty mid cap 150, just up by about 0.3%, and so the small cap 250 up by just about 0.2%. So that's with regards to, of course, where the markets go. But let me welcome in our guests for the day, Tapan Doshi, research analyst at CA-Tapan.in, and Kush Bora, founder of KushBora.com, also joining us. Very good morning to both of you, gentlemen. I'll start by taking the first question, which is coming in from Mohit, who's writing us from Ludhiana, asking about Bandhan Bank. He's got around 500 shares at the levels of 187. His time horizon is around 2 years. Wants to know if he can go ahead and continue to hold this counter. Tapan, what would you recommend?
Yeah, good morning. So if you see the credit cost normalization will happen in future, and again retail diversification the bank is doing. Secured loan mix is going up, because they were having a problem with MSME loans. So hopefully the profitability should improve, and even the deposit franchise is going up. So overall, I think the things are moving much in a better shape than earlier. So he can hold on to the stock currently.
Query is coming in from Raja from Chennai. It's on RPG Life Science. He's holding 40 shares, bought at a price of 1,985. Tapan, your view on this? Should he continue to hold or sell?
Yeah, currently, if you see the overall profitability, the last few quarters was little bit on the margin side was in a pressure, but I think management is quite optimistic for the future. If you see the domestic formulation remains strong, API recovery is gaining momentum, and the only thing is the margin. We have to see how it is going to pan out. But at this level, I think the stock is well priced, so he can hold on to this stock also.
Next one that we have is on pharma names. Our viewer wants to know from a 6 months perspective, where can he or she go ahead and invest 1 lakh rupees in a good pharma name? He says he's thinking of Laurus Labs, Dr. Reddy's, or even something like Zydus Wellness. But Kush, we've talked about, mid cap and small cap names in the pharma space, but even they have run up quite a bit since then. So if you were to play the theme right now, is there any particular name that still looks very attractive?
So first up, a very good morning to you and to all the viewers. Yes, and I'm a firm believer in strength, right? And this sector still displays strength. So despite it having run up, it's also seeing profit booking along the way. So that's a healthy sign, by the way, no pun intended. So I think there's a good possibility that this sector could continue to run even as the markets continue to do well and not just be a defensive play. So I think a couple of trades, I wouldn't really recommend Laurus Labs at these levels because it's actually run up quite a bit. So maybe on declines, there's definitely strength there, but the risk reward ratio right now is not favorable. Dr. Reddy's, that's a good one. Technically also, it's on the verge of a breakout near the 1375 mark. Once it crosses and closes above that, I think you can gain, you can see further up moves, perhaps even to levels of 1450, even 1600 odd levels. So I think positionally, Dr. Reddy's is much better placed. I would suggest a stop loss at about 1275 odd levels. But in the past, we've discussed a lot of stocks like Shilpa, Medicare, and Acom's drugs. So perhaps those can also be considered. But amongst the list that you mentioned, Dr. Reddy's looks strong.
Okay. The next is a caller query coming in from Andhra Pradesh. Bharat, you can go ahead and ask your query.
Good morning, sir. I am holding a Kirloskar at the price of 2182. I am holding a 200 shares. Can I average or can I wait? I am go to the Kushbora, sir.
Okay. Kush, your view on Kirloskar Brothers?
Hey, hi Bharat. First of all, very good morning and thank you so much for directing the query at me. I presume if you've been watching the show regularly, you know that I've recommended Kirloskar Brothers just some time ago, and in fact I'm quite positive on the entire pack, which is Kirloskar Oil, even Kirloskar Pneumatic for that matter. They've just run up a little too much, and I think you've perhaps ended up buying this at a slightly elevated level. Nevertheless, the structure is strong. What you're seeing right now is mere profit booking. So I would suggest continue to hold on to this one, continue to wait. Keep a positional stop at about 1845, 1850 levels. That's a support zone. If that is broken, you might want to exit. But if not, you could see some profit booking, and then the stock could continue its up move from here on. So hold it, but with a stop loss at 1850.
Okay, all right. The next one, I think we've got Manohar calling us from Hyderabad. Manohar, very good morning to you. Go ahead, ask your question.
Yeah, good morning and thanks for taking the query. Yesterday there was a stock recommendation regarding Genus Power. It was given by Kushbora and Chandan Taparia regarding the entry price was at 347. But today the stock was low actually. Is it the right time to enter or should I wait for the stock?
Okay, got your question. Kush, your view on Genus Power?
Awesome. So, Manohar, the stock choice is right. The entry level, perhaps you might just want to wait up a little because yesterday, yes, Chandan and I both had a consensus call on Genus Power, but mind you, before that, I think about on Monday or maybe last week sometime, we did give a call on Genus for levels of 340 and 350. Yesterday's call for me at least was an extension, of the stock doing well. My suggestion, there is still strength in the stock. The move that you're seeing today is the first day of profit booking. Volumes aren't all that great on the downside, which is a good sign. So yes, keep this on your radar. I wouldn't buy it now, maybe closer to about 325, 330 odd levels, which is a support zone. If it holds from there, then I think, you can get a good entry price. Like I said, the structure is strong. Let's see where this fall settles and you can consider an entry point, at around the 325, 330 zone.
Upon the next query is for you. It's from Raghuram Patro from Bhubaneswar. He's holding few shares of Sterlite Tech, bought at a price of 195. He wants to know your view on this counter post the QIP announcement.
Yeah, see, I think this is the first QIP which is having a premium note. That's a good thing. That's why we can see a circuit on it. But yes, demand is quite good. Of course, valuation is on a higher side, and your data center demand is accelerating. If you see the company saying that in next year the margin improvement will be there. The global OFC demand is recovering. And I think the enterprise business is also scaling across India. The only thing is some execution risk will there for this company overall. And telecom capex timing is also risky. So debt is on an elevated level. So my take is hold on to the stock. Okay. And I think he has bought at a very lower. Congratulations and hold on and keep a stop loss maybe 20% down and just ride the trend.
So that's the view coming in on Sterlite Tech. The next one that we have is on Blue Jet Healthcare. Our view is holding 100 shares bought at the levels of 540. This is Rakshit from Udupi who's writing in. Tapan, what would you recommend for this one?
We're talking about blue chip healthcare now. If you see the financials, the quarterly results are okay. From here now, we have to see how they are going to perform on the revenue front. Because the management is whatever guidance there is not so positive, but hopefully things will be better. The demand is robust, no doubt about it. But I think the next capex we have to keep in mind, and also the interest cost and the debt level. But at this level, I think one can hold this stock currently.
The next query is coming in from Malati from Hyderabad. He has bought Fractal 100 shares at a price of 966. He wants to know the short-term view on this. Kush, any view on Fractal?
Limited data, the stock is seeing profit booking and some selling pressure at higher levels, but I would suggest continue to hold because in the last 5 sessions the volumes on the way down are starting to thin, which is a good sign. So I'll take that, but I will still hold it with a stop loss at 915. So continue to hold Fractal, stop loss at 915.
The next one that we have is on Trent. Our viewer is holding 27 shares, bought at the levels of 3,600. This is from Sudhinder. He says that he's planning to sell this at 4,000 levels. Should I continue to hold? And whether it could reach that level in the near-term future. Kush, what are the charts indicating?
You should most definitely continue to hold this because this is a long drawn phase of consolidation, and I'm perhaps being euphemistic when I call it consolidation, long drawn phase of profit booking, after which the stock is starting to rebound. Now you've had golden crossovers, volume uptakes, the stock's actually taken on multiple resistance levels. So I don't think 4,000 is a very unreasonable target on Trend with the kind of up moves that you're starting to see now. Good base formation, and the move comes after like I said, a long drawn profit booking. Definitely continue to hold, but as I always do, stop loss close to the 3,000 mark, maybe just under it. But yes, there's a good possibility that in the coming months, trend could move towards 3,750 and 4,000 levels.
Coach, the next query is for you. It's on MV Photovoltaic. Lokesh from Andhra Pradesh wants to enter this counter. Is it good for short term, say for the next 6 months?
Very interesting bet, and I think it's a good time to enter the stock because it had a vertical run and then it's starting to consolidate, and consolidation in a market which was otherwise seeing profit booking is a very healthy sign. I would consider a long trade on MV Photovoltaic. Stop loss near the 3,000 mark, very strong support zone, has respected that 320 325 zone for a while now. So yes, you can consider a long trade on MV Photovoltaic at these levels for higher targets of about 370 and 395 plus.
Okay, all right. So that's the view coming on MV Photovoltaic. I think we've got SN Murthy who's calling us from Bazaar. Very good morning to you. Go ahead, ask your question.
Good morning, madam. My inquiry regarding Pavarica. I have seen I am a daily viewer of your NDTV Profit. I have seen on 17th or 18th regarding this KYC program about Pavarica.
Right.
I have purchased by that from 530 rupees by right. Now it was 660 or something else. Shall I accumulate more?
Okay. Got your question. What's the time horizon that you're looking at?
Now 1 or 2 years, madam, no problem.
1 or 2 years. Okay. Got your question, Mr. Murthy. I'll take this up with Tapan. Then Tapan, Pavarica, any view?
So Murthy, if you see the power backup demand is actually strong now, and in future data center demand is going to come up in a big way. Again, for this company, export opportunity is expanding. The only thing is, they are quite dependent on the DG business, and the raw material cost volatility is there, and that is what is impacting a little bit margin front. But I think infrastructure capex is supportive, so they have a presence across India. You can buy, but buy on dips. I think the stock is good, but I think it will be beyond dips category.
Okay, all right. So that's the view coming in on Pavarica. I think we've got Shankar also waiting by. You're calling us from Bengaluru. Shankar, go ahead, ask your question.
Good morning, madam. Excellent anchoring and good information you are providing. I have seen your analytics also.
Thank you so much.
And my query is to ever smiling Kushbora. I am holding RateGain Technologies 50 shares at 564. The price has run up considerably. I think recently they have acquired some companies.
Okay.
So what is the long-term view? Can I add it on dips, or what could be the level I can add?
Okay, got your question, Shankar. Kush, your view on the charts for RateGain, is this the right time to add? Wait for some more time?
So, Shankar, the reason I smile always is because of callers and viewers, like you, pouring in these lovely comments. So, thank you so much for that. First up, congratulations, because the entry price that you have on RateGain is fabulous. You're sitting on amazing profits. If you were in Mumbai, I would have perhaps even asked you for a treat. But of course, that's on a lighter note. But nevertheless, the stock is in a very strong uptrend. Immediate resistances from the recent swing highs at about 895, 900 odd levels. I would not book this out. I would actually continue to hold because massive accumulation seen in the last 5 to 6 weeks. So yes, once the 900 level is taken out, the stock will actually zoom higher, see significantly higher levels from there. So continue to hold on to RateGain. I would, however, put a stop loss at about 780, 775 levels, because if that is broken, then the near-term structure could perhaps get a little worse. But nevertheless, congratulations on the amazing profit you're making. Continue to hold. Stop loss at 775.
All right, so that's the view coming on RateGain. It's time for a rapid fire round. Kush and Tapan, you both know the drill. Try to keep your answers as short as possible. The first one is from Salini, who's writing us from Chennai. She wants to know about Hindustan Construction. She's bought it at the levels of, I think, 27 rupees, and she's holding around 100 odd shares. From a short-term perspective, what's the target that you're viewing on the charts, Kush?
Continue to hold. I would suggest a target of 29.5 and 33, and stop loss at about 25.5. 25.5.
Next query is for you, Tapan. It's on GMR Airports. Murthy from Hyderabad is holding 460 shares, bought at a price of 89, currently sitting on a profit. Should he continue to hold or exit?
No, please hold for a long term.
Okay, the next one is on Eicher Motors. Jayakrishan from Kerala wants to know if this is the right time to make an entry from the next 6 months perspective. Kush?
Yes, you can. The uptrend is gradual, but it's an uptrend nonetheless. So yes, you can make an entry from 6 months perspective. Stop loss at 74.50.
Tapan, for you on Olectra Green, Asta is holding few shares, bought at a price of 1,285. Should she continue to hold or sell this counter?
No, hold. And if she wants, she can add on dips also.
Okay, Bharti Airtel, the buying price of Narayanan from Guntur is 2,100. He's holding 150 odd shares. Hold or sell, Kush?
You can hold, but I think your waiting period is going to be a little long. Stop loss at 17.75.
Kush, the next query is for you. It's on Indigo. Lalita from Bangalore is holding 10 shares, bought at a price of 4,985. She's sitting on a profit. Should she book profit or wait for more short term?
Brilliant. No, I think you should continue holding on to this. Stop loss for this one, 5,200.
Okay, the next one is on Jupiter Wagons. Ashish from Delhi wants to hold this for the next 2 odd years. Can he buy it at the current levels, Tapan?
Yeah, valuation is okay, but yeah, it's not moving completely consolidated. But yeah, you can buy at this level. So valuation is good.
The next query is for you, Kush. It's on Lupin or Mankind. Dinesh from Noida wants to know which one is a better bet.
I think both are rather well placed. If you ask me, there's been quite a bit of run up, in Mankind Pharma recently. I would suggest go with Lupin on the cusp of a breakout, and stop loss for this one will be close to the 2,300 mark.
Okay, Garuda Construction is the other one. The short-term targets on this one. Shiva from Hyderabad is holding 1,000 odd shares, bought at the levels of 199. Kush?
I don't track this very closely, so I'll just give a quick view. 165 is the support zone, so if you have a position, keep your stop losses around that level. But like I said, I don't track this closely.
Okay.
Right, Tapan, the next query is for you. It's on Siemens. Arun is holding few shares. He can hold for the next 1 year. Should he do that?
Yeah, please hold on.
Okay, the next one is from Vinay, who's writing us from Bengaluru. He wants to invest around 5 lakh rupees in BEL, Ashok Leyland and Reliance from a long-term perspective. All three? Or any one of these, Tapan?
No, all three are good. I think Reliance demerger will also help the Geo Finance. So yes, all three.
All right, okay. That brings us to the end of this first rapid fire round. But viewers, time to slip into a very, very short break. But don't go anywhere. We'll be answering more queries on the other side of the break. So do stay tuned.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either give us a call or send us your WhatsApp, your queries on the WhatsApp number that's flashing on your screen up there. As Praveen from Hyderabad has done. He's asked about Bank of Baroda. He's holding around 3,000 odd shares that he's bought at the levels of 211. Wants to know if he can continue to hold this one or not. Kush, your view on the charts. He's already sitting on handsome profits.
Very well continue to hold. The banking pack is now starting to come to fore, especially Bank of Baroda with all the underperformance that it had for a while. It's gradually starting to inch up. Not my top pick in the space, but with the kind of moves that it's making, it's definitely a hold. For this one, I would suggest a stop loss close to the about 260, 265 zone. So that should act as your stop loss, but continue to hold.
Okay. The next query is coming in from Nivi from Chennai. It's on Sigachi Industries. She has around 250 shares, bought at a price of 53. Tapan, any view on Sigachi?
See, Sigaji, it's underperforming quite a lot, and the problem was that the revenue is going down. Again, if you see the fire incident has impacted a lot. I think insurance settlement is still pending, so we have to see that, and the working capital pressure is there. The guidance for the next year is on a higher side, but still I am quite skeptical about this. So wait for 1 quarter, otherwise move out from the stock.
Okay, the next one is on HDFC Bank. Karthik from Dallas is saying that he wants to enter into this counter from the next 3 to 6 months perspective. What should be the target and stop loss for this one? Kush?
Okay, so this is a particularly tricky one because the banking pack is starting to move. HDFC Bank is starting to show traction, but I think the bank is perhaps going to face major headwinds around that 800, 825 zones. Even from the next 3 to 6 months perspective, there is a possibility that the upsides could rather be underwhelming. So my suggestion, you're better off looking at ICICI Bank or even SBI for that matter. Axis, I am just throwing in a few names which can be considered, which are likely to outperform HDFC Bank. Given the kind of setup. But to your query, like I said, the immediate resistance at about 825, 830. If you do want to consider, you should keep your stop losses near the 755 mark. And if this resistance is taken out, then indeed you could have a big run where the bank could actually go on and hit about 875, 900 odd levels also. But like I said, resistance is multiple resistances ahead.
Right, the next query is coming in from Raja from Delhi. It's on ONGC. He wants to know whether it's a good time to enter from long-term perspective. Tapan, your view?
Now see the oil prices coming down. Now it is $73, so it will have an impact. And looking like the Iran oil coming again, UAE increasing their production, also Venezuela oil coming. So it looks like it will remain below $70 for a longer time. So at this level, I don't think one should go for NGC. If someone wants to go oil marketing company like BPCL, HPCL will be a better option.
Okay, all right. So that's coming in on ONGC. I think we've got Anjani who's waiting by calling us from Vijayawada. Anjani, a very good morning to you. Go ahead, ask your question. Hi, Anjani. Can you hear me?
Hi, ma'am. Good morning to all of you.
Yeah.
I want to check with Kushbura, sir. I'm having transformers and rectifiers. Yeah, I wanted to know what is the long-term and short-term view on this.
Okay.
Kushbura, sir.
Okay, got it. So Kush, your view on Trill, I think she's sitting on profits of around 20,000 rupees. She's bought it at the levels of 300. What would you recommend?
Yeah, so first up, thank you so much for directing this query towards me, Anjani. I think your entry price is brilliant, and I think it took some courage to actually buy this stock when it fell so much and then on the way up. But like I said, your entry price is actually very interesting. Right now in the last 4 sessions, what you're seeing is actually profit booking on very thin volumes. The stock is still close to the 200-day moving average. Once again, if it closes comfortably above it, I think there is more room on the upside, even to levels of about 380 and 415 plus. You should continue holding on to this because the risk reward ratio from a near to a medium term perspective is still very positive. What you should, however, also do is put your trailing stop loss at your buy price, which is 300. So if that is broken, take money off the table, but continue to hold.
Right. Next is a caller query coming in from Vizag. Chaitra, you can go ahead and ask your query.
Good morning to all of you, sir.
Good morning.
Regularly, I'll watch NDTV Profit, and especially I used to call on Thursdays for Kushbura, sir. Your analysis is very good, sir. So, yes, sir, I'm having Angel 1 270 average. So, what is the long-term and short-term view on this, sir? Shall I hold or exit price?
You on Angel 1?
That's for me, right?
Yeah, Kush.
Yeah, hi. I remember Chaitra now. She has been very kind in the past also to mention that she's been calling on Thursdays just for getting the query answered through me. So thank you so much once again, Chaitra. I'm not very comfortable with Angel 1. The recent run up is magnificent. However, now you're starting to see negative divergences. I won't be surprised to see some profit booking come on this stock. So I would suggest you should book partial profits and then continue to hold the rest of the quantity with around the stop loss at 320. There is a possibility that the stock might perhaps resist here or see some sort of profit booking going forward. So like I said, partial profit booking, continue to hold the rest with 325 as your stop loss.
Okay. The next one that we have is on Finiotex Chemical. It's fairly a small counter, 4,400 crore market cap. Bharat Marfatia from Mumbai is holding 3,000 odd shares, and he says that he wants to add 3,000 more shares of this particular counter. Is this the right time to average, Kush?
You already know my answer to that. Not a big fan of averaging. Wouldn't really suggest averaging on this one. Could you just quickly confirm the buy price that he already has? Sorry, losing you.
Okay, no worries. I'll fix that for you. But Finiotex is what we're going to talk about. We'll bring Kush back once the technical glitch is solved. But the next question that we have is coming in, and this is on GSCL. Raidu from Hyderabad says that he has a query on this particular name and wants to know if he can go ahead and invest into this one at the current market price. It's again a very small counter, but any view on this, Tapan?
See, if you see the domestic soda ash demand is stable currently, and synthetic soda ash, expansion plan, they are already doing it. The only thing is export realization pressure is still there for this company. And global, if you see soda ash oversupply is already there. But hopefully, company is going to come with a value-added product. So if you ask me about the balance sheet, it's healthy, and EBITDA also is recovering. So yes, he can add, but not at this level. I think he can just wait for some time more, then he can add more at this level, at a lower level.
Right. The next query is coming in for you, Kush. Okay, the next query is on CG Power actually. Anil Singh wants to know whether is it a right time to buy CG Power. Any view on this, Tapan?
But talking about CG Power, you see their main trigger will be semiconductor plant commissioning ahead, and we have to see when the production will start coming from there. Power T&D demand is also robust. Railway industrial demand is also strong. The EBITDA margin, if you see, it's good. They have been doing very well. Even the manager, Murupa, it's doing quite good on the way they operate the company. So I'm quite positive, but it will be a slow mover. But yes, if he wants, he can add at this level and on dips also. For long term, I think it's a good stock to hold.
Okay, all right. So that's the view coming in on CG Power. I think we've got Yogesh who's calling us from Jaipur. Yogesh, go ahead, ask your question.
Good morning. My question is to Boraji.
Okay, go ahead.
Actually, I have 100 Hyundai shares for last time I talked with 1,650. Today, still I am interested to buy. My target is 3,000. What I do for that?
Take it. Got your question, Yogesh, but we are facing some technical glitch with Kush Bora. So I have your question with me. Okay, my director just told me he's back, so I'll take it with him then. Kush, he's asking about Hyundai. He's got 100 odd shares at the levels of 1650 and he wants to know if he can buy further. I know your answer to not averaging, but your overall view on Hyundai.
Yeah, and I also remember Yogesh ji, by the way. He is from Jaipur, close to my hometown, and he's been calling regularly. So thank you so much for that, Yogesh ji. Kamagani. What I would suggest is continue to hold. First up, his buy price is fabulous. The recent low for Hyundai is 1658. So obviously he's bought it slightly earlier, right? But the uptrend on this one gradual. I think there is further upside to be had on the stock. He should continue holding on to this. I think in 12 months time or maybe a little more, 3000 is very much likely, perhaps a little more. So continue holding on 1800, 1850. That should act as a stop loss. But Yogesh ji, मैं ये भी suggest करूँगा कि मुझे technically मारुति और M&M जरा better placed लग रहे हैं हिंडे से. तो अगर आप switch करना चाहें partially if not fully, आप वो भी consider कर सकते हैं.
Yet another caller query coming in from Hyderabad. Vijay, you can go ahead and ask your query.
Vijay holding Transrail lighting share.
Okay.
400 shares at buy price 570. Okay,
and you can hold for long term?
Yeah, no, I want to know the technical, short term.
Okay. Kush, your view on Transrail lighting?
You owe me a coffee now. For the slip up.
Yeah.
No, not very constructive on Transrail lighting. There have been multiple attempts at a rise. They have been sold into and massively on the back of heavy volumes. Multiple resistances ahead at about 530, then at about 550, 560 zones. His buy price is above that too. My suggestion for now, continue to hold. But once the stock starts to approach these resistance levels, start exiting gradually. Don't wait for your buy price to come. The structure on this one, not very constructive. Immediately, I would still suggest a stop loss at 490. So like I said, hold, but start exiting once these resistance levels, the stock approaches these levels.
Kush, while we had that technical glitch, I think you were talking about Finiotex Chemical. If you can just complete that view.
Could you just tell me the buy price quickly? I think that's what I missed it last time around as well.
I think it will be okay. I think it will be difficult for me to find
Fair
out.
enough.
But yeah, there you go. My director said that it's at 25 rupees.
Brilliant. So that's a brilliant buy.
Yeah.
And you know the stock actually broke out at that level. So amazing buy. I don't have the name of Bharat. Yeah, Bharat, congratulations to you. Kudos. What you're seeing right now is profit booking. Don't average it. Continue to hold. Keep your stop losses at 37. But it's had a good run. Continue to hold.
Right, the next query is coming in from Anil. He's holding 500 shares of Jio Finance. He got it as a part of a demerger that we had seen last year, a couple of years back. But any view on this, Tapan? Should he continue to hold Jio Finance?
Yeah, if you see Jio Finance, the lending AUM is increasing sharply. If you see the mutual fund business is also expanding, digital finance platform is scaling. I think insurance and broking also expansion is ahead. So yes, all these are positive. The only thing is valuation discount much of the growth and loan book relatively small. So we have to wait and watch. But I think at this level, I'll go for Jio Finance. I think in next one, if we can hold 1 or 2 years, I think this may give you a better return.
All right, so that's the view on Jio Finance. The next one that we have is on Emcure Pharma. Venkat from Hyderabad has bought around 26 shares at the levels of 1900 rupees. From a long-term perspective, he wants to know whether he can continue to hold or not. Tapan, what would you recommend?
See, the stock is good, and if you see here, the women's health, quite there. The driving growth is there. International business is quite expanding. The only thing is R&D expense is on a higher side. Their specialties portfolio is scaling up, and new portfolio launches. Hopefully, they are going to come. The only thing is we have to see the regulations and observations and all that. But at this level, I think one can hold to the stock, and buy on dips category will be there for this stock.
Okay. Yet another caller query coming in from Guntur. Ajay, you can go ahead and ask your query.
Hello, am I audible?
Yes, you are audible.
Having NLC shares of 500 quantity at 318 each.
Okay.
So every day I'm listening like good news from the stock, but whenever the good news is going on, more people are selling, and buyer quantity is very low, but the stock is not showing any momentum.
Okay.
Kushbura, I want to know about his analysis.
Okay, Kush, your technical view on NLC?
Ajay, you're spot on, and trust me, I feel your pain, because even for me, I've been watching this stock actually do well, and even the good news is being sold into, which is not a good sign. But take heart from the fact that the selling volume is very low, which means it's the weak hands that are being shaken out of the stock. Otherwise, the trend remains positive. It has good support zones near 300, 305 zone, and even now with the kind of drop that it's seen in the last 2-3 sessions, it is still above your buy price. So take heart from that fact. The verdict on this one is continue to hold. Keep a stop loss at 300 to 5 zone. The stock has steam to move higher from these levels.
All right, okay. The next one that we have is on Happiest Mind. Vineet from Nagpur wants to know if he can go ahead and buy this at the current market price from a medium-term perspective. Tapan, what would you recommend?
No, see, for this company, the margin pressure continues. International business is in risk. Again, the growth, if you see it's quite lower than what the expectation is. Client spending remains cautious. So lot many headwinds are there. Of course, AI and Gen AI demand is accelerating. That will help company. But I think the margin pressure is the bigger problem here. EBITDA margin also not coming up overall. So I think better to stay away from this company till at least for 1 or 2 quarters more.
Right, the next query is coming in from Mohan from Coimbatore. It's on Apollo Microsystems. Tapan, your view on this counter, should he continue to hold?
Yeah, I think the stock is okay, and the only thing is valuation is much more on a higher side, and the defense order, how they are going to execute, order books is big, but the execution is the main thing. The space opportunity is quite big. Government order dependence is there, so we have to see the working capital, and balance sheet is healthy, but the valuation is much more on a higher side. So one has to wait for some time, maybe 10-15% down one can enter.
Okay, all right. The next one that we have is on Titagad. Aniket from Karnataka is holding at the levels of 844. Kush, your view on the charts for this one from a short-term perspective?
You can continue to hold. I generally don't like this pace, but the recent move is encouraging enough to suggest that there could be some further up moves that could come about in the stock. Right now you're seeing some profit booking, nothing to worry about. Golden crossovers on a couple of setups, 20 and the 50 DMA versus the 200 DMA. Like I said, continue to hold, keep tight stop losses at about 880, 885, but you have to wait for the stock to cross 925 levels. If those are taken out, it could actually see further up moves. Continue to hold.
Okay, the next query is coming in from Ravi from Chennai. It's on Havells. He's holding 300 shares, bought at a price of 1,590, currently sitting on a loss. Tapan, what should he do? Should he continue to hold or exit?
See, if you see the consumer demand is improving, the only problem is that the Lloyd margin is on a quite a going down actually. Copper prices volatility risk is there, but copper prices are now coming down. So valuation is on a premium side, but the thing is the distribution expansion they are going to continue. New product launches are there, and balance sheet is quite healthy, and you can see electrification theme is going on. So yes, I'll say hold on to this stock. I think 1 or 2 quarters, things will be much better.
Okay, all right. So that's the view coming in on Havells. The next one, I think Dharnish has written in from Tamil Nadu. In fact, he was trying to call but couldn't connect. But his query is on Pine Labs. He's holding around 122 shares, bought at the levels of 201. Enough data on the charts, Kush, to give a view on Pine Labs?
There is. I can understand the pain that the fact that he's bought it at higher levels. But if I were to buy now, my risk-reward ratio would be extremely favorable. There has been massive volume, activity in this stock in the last 1 month and a half, 2 months. With a positive bias, I might say. So yes, you should continue holding on to this. And this is perhaps one of those rare times where I can say you can go ahead and average it. The only reason is because from here on, also the stock looks, to move higher, and his buy price is considerably higher. So yes, you can look to add this stock at current levels also. Good accumulation, good up move on this one. Positional stop on this one, however, comes in at 145.
Right, the next query is coming in from Sankara Narayan from Kochi. He has around 1,000 shares of Vedanta, which is now split into 5 stocks. He wants to know whether should he book profits on the original Vedanta shares or continue to hold it for the next 2 years. Tapan?
No, currently, if you see the demerger value unlocking already done, now we have to see the price discovery for Vedanta. And currently, the metal prices are coming down, which is having an impact. So my take is that it may go down maybe 10-15% more down from here. But overall, I think because now it's an independent entity, it will have a better process. And again, the holding discount will be there, but Hindustan Zinc is doing well in future, will be doing well. So that will be benefiting. So hold on to the stock, but don't add it.
We have is on Vintage Coffee. Sunita from Hyderabad has bought 150 shares at the levels of 127. She wants to know if she can book profits or continue to hold from a short-term perspective. She's sitting on decent profits. Kush, what would you recommend?
Stumble upon this share, I'd be curious to know. It has been on my radar as well. In fact, we've recommended this to our clients on our advisory, so there's a disclaimer. I think you should continue holding on to this. This is not a very short-term, near-term play. There is a good possibility that the stock would actually move significantly higher from these levels also. So I would suggest you should continue holding on to this for some time. Yes, it's run up quite a bit, off late in the last month and a half, and hence you're seeing some profit booking. But otherwise, I think there is a good possibility that the stock would move significantly higher from here. I would, however, suggest a stop loss just under the 140 mark or thereabouts. So continue to hold, stop loss 140.
The next query is for you again. It's on NetWeb Tech. It's from GK from Bangalore. He is saying that earlier he had bought when you had recommended and he made a good profit. He wants to know whether, again, is it a good time to enter NetWeb Tech?
So the stock is in a very good uptrend. There are negative divergences, and I think you should look to add this, but closer to the 4775, 4800 levels. And if you add there, your stop loss will be close to 4500, 4550. So yes, look to add this, not at these prices, at slight declines.
Okay, all right. So that's the view coming on NetWeb Tech, but it's time for our rapid fire round. Second round of rapid fire, of course. Try to keep your answers as short as possible. The first one is on MCX. Prashant from Bengaluru has bought 31 shares at the levels of 2925. Continue to hold, Tapan?
Yeah, hold for long term.
Next query is for you, Coach. It's on Tata Steel. Sivraj is holding 500 shares, bought at a price of 95. Should he hold or sell?
At the price of?
95 he's written here.
Wow, then I think it's a long-term holding. Continue to hold. Positional stop at 165.
LG Equipments bought at the levels of 560. 600 shares is what Ganesh from Chennai has been holding since long. What should he do, Kush? He's been a patient investor.
Continue to hold. This will reward going forward as well in all likelihood. Positional stop at 570.
The next query is for you, Kush. It's on Vodafone Idea. Umang is holding 10,000 shares, bought at a price of 18.5. Should he continue to hold this counter?
It's in an uptrend, recent profit booking, fair enough, you can continue to hold. But if it breaks 12.5 or those levels, please exit.
Okay, Krishna Defense is the other one. Our viewer wants to know if this is the right time to enter into this one. It's seen a significant run up. Tapan, any view?
No, not now. No, let it come down at least 20%, then only. Otherwise, valuation is on our higher side.
The next query is for you, Tapan. It's on RR Cable. Vinod from Delhi wants to purchase RR Cable at the current level. Is it a good time to buy?
Yeah, quite a good stock, but still valuation is on our high side. Maybe 15% down from here is good level.
Somani Ceramics is the other one. Raghunath Nair is holding 175 shares. His buying price is 511. Continue to hold, Kush, or sell?
No, continue to hold. Keep a stop loss at 490, 495 zone.
The next query is for you, Tapan. It's on LG Electronics. Anil from Mumbai is holding 50 shares. Should we continue to hold, sell, or book profits?
Sell on rise.
Okay, the next one is on, and this is from Bharat, who's writing us from Hyderabad. He wants to know about one counter that he can go ahead and invest in the chemical space. Kush, anything that you're liking on the charts?
Navin Fluorine.
Okay, the next query is on. The next query is from Vinayak from Bangalore. It's on RVNL. He has bought 440 shares at a price of 423. Currently sitting on a loss. Tapan, should he continue to hold?
No. Get out from the stock as it goes up.
Okay, the next one is on Oracle Finance. CP Singh from Delhi is holding 12 shares, bought at the levels of 7746. You know, this is one of the counters that has outperformed as compared to where the other IT names go. Tapan, your view?
Yeah, hold on to the stock.
The next query is for you, Kush. It's on CSB Bank. Anuj from Delhi is holding 2,000 shares, bought at a price of 368. Should he buy more at current levels?
No, don't buy more, but continue to hold. The downturn is along with certain heavy volume, so I have a bit of a concern there, but still hold. Stop loss at 310.
Gujarat Gas, 6 months is the time horizon that Bhaskaran is looking at. He's bought 100 shares at the levels of 350. Kush?
Exit.
Tapan, the next query is for you. It's on Dr. Reddy. Barani has few shares, bought at a price of 1,320. Should he sell or hold?
No, hold.
Oberoi Realty, Angad from Indore wants to know if he can continue to hold from a medium-term perspective. Tapan?
Yeah, please hold.
Tapan, the next query is for you. It's on IRCTC. Praveen from Chennai wants to know whether should he buy IRCTC from long-term perspective.
No.
Genus Power, 300 shares, bought at the levels of 333. From a 6 months perspective, Kush, what's the view?
Yeah, continue to hold Genus Power. Like I said, stop loss at around 380, 315, 320 levels.
Coach, the next query is for you. It's from Pratiksha from Muscat on Kansai Nerolac. Currently, she's sitting on a loss. Your view for the next 6 months?
It's consolidating. You can hold this. Strict stop loss at 200.
Okay, BKG Foods, 100 shares, bought at the levels of 750. Hold, book losses. Tapan?
Yeah, please hold.
Coach, the next query is for you. It's on Canara Bank. Dheeraj is holding 900 shares, bought at a price of 134. Should he average now or sell?
No, don't average. Continue to hold. Stop loss 124.
Okay, all right. So that is the view coming on Canara Bank. But that completely out of time on this edition of Ask Profit. Tapan, as well as Kush, thank you so much for taking out the time and helping us answer all those stock-related questions. Viewers, if you've missed your questions, you can tune in at 2 p.m. and ask all your stock-related queries. But like I said, completely out of time. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of real. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on
Hello and welcome to KYC, and you're watching NDTV Profit with me, Sharad Dubey, and this is a very interesting show where we get you the most interesting companies and also the companies which are buzzing as well. But before that, let me give you some hints. Try to guess this company. There are 3 hints which will come on your screen right now. It's a Hyderabad-based packaging company. It's an old listed company, nothing new about it. A company deals with the rigid plastic packaging solutions, and from the March lows itself, we have seen a significant up move coming in. Try to guess it. I'm going to give you some time. Well, yes, the company in focus is Moltec Packaging. This is the company which we are getting in KYC today. But why are we getting this company? That's the big question to be asked. There are a lot of questions there. Of course, recently they had come in a conference also where the bullishness was coming in from the analyst community. But remember the raw material prices, they were at once very high. There's a crude derivative angle as well. Now that has come off. So we'll try to understand the question. What's the margin outlook going ahead? What's the volume growth guidance across various sectors in the company is actually functioning? So we'll try to understand the overall momentum from this space, and of course the client confidence. This is very much important to track. The segmental performances. Are all segments firing cylinders, or is there some drawback? We'll try to get more about that from the management as well. Apart from that, the margins and the revenue outlook for FY27 is something which we'll talk about, and any new strategic tie-up or a new product in which the company is entering, that is where the focus will be. But enough of the questions. Let's try to understand what's the entire story about Moltec Packaging. Let's start with that. What's about the company? It was established in the year 1986. It's Hyderabad-based company and it was listed also in the year 1993. So pretty old track record which the company is having. It's one of the largest players, you could say, in the rigid plastic packaging industry. And if you look at more details here, they have lubricants, paints, food, and even pharma. So 4 important sectors where the company is focusing on. Looking at the total manufacturing sites, इनके पास लगभग 10 manufacturing sites हैं और 2 stock points हैं. The installed injection molding capacity that comes in at 63,000 tons per annum and 175 plus injection machines. But let's look at the major customers. Customers are pretty big, be it the consumption names and also you could say the pharma names. We have Asian Paints, Castrol, Shell, Mondelez, HUL and even Nestle. These are the important clients for Moltec Packaging. So that's pretty much interesting that they have got, you could say, a very strong set of customers, and whenever these customers also move positively, of course the second order effect comes in positively for this company as well. But let's look at the FY26 performance, how things have moved ahead. And looking at it, the EBITDA per kg, that's the operational number to track, that has gone up 8%. And even if you look at the sales volume, that seems to also jump by almost 11.4%. Interesting, right? But let's go a little bit more deep into it. There are 3 segments: paints, lubes and form and fill, FNF as it's called. Largely paints is having 43% revenue contribution coming in, while form and fill is 41%. On the whatever is left, 16% comes from the lube segment. But apart from the revenue breakup, let's look into the revenue growth. What has happened in the 4th quarter? What's the report card stating? Paints is up 24%. FNF segment is up almost 25%, but concern is in the lube segment. That's negative. It's down 9% on a year-on-year basis. But our thesis is what may work for the company. Why are the analysts talking about it? Why are they turning bullish in the recent conference? That's where my interest came in this counter. And you see largely the pharma packaging, that's expected to pick up because a lot of, you could say, inspections are getting over for pharma companies. And once that happens, the second order effect starts coming. ये कंपनी पैकेजिंग बनाती है तो फार्मा प्लेयर्स को अप्रूवल आया और उसके बाद से पैकेजिंग की भी धंधा या ऑर्डर आने लगता है. Better margins because of backward integration, and that's very much important in a packaging segment. There is a capacity consolidation at play as well, little bit of adjustments. So that also boosts, a minor one only, but at positive side for the EBITDA numbers. They are focusing on the new high margin segment, and the volume recovery is also at play for the paint clients. And remember, the paint clients, they are the largest ones, Asian Paints, and we have already seen that. There is a minor re-rating already happening for this counter as well. So second order effect does come in for a player like them. But there are some concerns also. It's not all rosy for Moltech packaging, and that's where my concern also rises. There's a cyclical nature of business. So you have to enter or exit at the right time for this industry. Now this is prone to the raw material pricing shocks, और कंपनी के बार्गेनिंग पर उतना ही अच्छा होता है जिस तरह वो प्राइस हाइक्स पास कर सकते हैं. ऑफ कोर्स कंपनी इज अ 40-year-old कंपनी, सो इन दैट वे they are very strong with the price hikes. The sector is out of favor on the Lal Street. That's also one concern. So it's a cyclical play, and right now packaging stocks, there isn't much premium being given in the markets for these counters, and my concern comes is there's a lack of analyst coverage also. That's the key, takeaways why the things might not work for the company. But let's try to understand the entire ratings. How do you give a company the ratings? There's income statement, balance sheet, cash flow. ये सब आप देख रहे हैं. ये जो है, these are the core numbers. Also, we see the shareholding pattern and also the street trade. Of course, we compare the company with the valuations. And I'll tell you one more important thing. That's the outlook. That's one of the most important things to actually track. So let's start with the first one, and that is the income statement. And of course, ये numbers जो है हम देखेंगे, largely you see single-digit CAGR coming in revenue, EBITDA, PAT. A little bit of concern definitely comes with the fourth quarter numbers are pretty decent, and the margins उतना ज़्यादा change नहीं होता है. And definitely the company has been able to offset the margin pressure which has come in. So it's largely, I could say, a neutral rating when it comes to the overall margins. But let's talk about balance sheet, what's happening here, and a little bit of concern comes if you're looking at the numbers on your screen. The borrowing numbers, that seems to be a little bit on the higher side. Cash levels is pretty decent. I was just checking the numbers, and the balance sheet management, it seems it's quite decent, but nevertheless it's not very good as well. Concern definitely creeps up. So as of now, right now, net I'm going to give this a neutral rating when it comes to the balance sheet. Moving on to the cash flow segment, largely it's been pretty decent. Cash flow from operation conversion to PAT, looking at the numbers on your screen, this is where a little bit of strength comes in, but there's a lot of financing and investing activities happening, and that is why the net cash flow levels you're seeing, this is in single digit right now. So it's a neutral rating as well. But let's move on to the return ratios. That's very much important to understand, and this is where my concern starts coming in. Each year the return ratios are seeing a bigger pressure coming in. Is it because of investments? Is it because of other reasons? That's what we are seeing. But is it bottoming out from FY25 to 26? That's where we'll try to understand. But as of now, it's a thumbs down when it comes to the return ratios. Also, let's talk about the shareholding pattern. कहाँ पे क्या changes आए हैं? Promoter की stake की बात करें तो it's largely flat, nothing much happening. FIs have been reducing it from 14%, you think it's coming down to almost 10%. DIs has been largely flattish in that 20-21% mark. So अभी भी बताएं तो mixed signals आ रहा है. So I'm going to give this a neutral rating as well. Street cred, a little bit of concern. Congratulations if you are a trader or short-term investor. That is where from the March lows itself the stock is up 48%. But if you're a long-term investor, it seems like you're stuck in the stock. From 2025 highs, the stock is down 17%. एक साल में stock flat था और 5 साल में सिर्फ और सिर्फ 44% returns आया है अगर आप इसमें निवेश किए हैं. So a little bit of concern definitely comes in when we talk about the street trade. But for short term, money is made. Long term, it hasn't been made. I'm going to give this a neutral rating. Valuations, let's have a look and look at the variations in the packaging industry. That is where my concern starts coming in, and looks like the company is evenly placed. 12-month trailing P ले लीजिए 32 times पे Moltech packaging आ रहा है. Jindal Poly, TCPL, they range between 27 to 49 times. Uflex is so down. It's 10 times it's trading, and on the other hand, Polyplex is up 83 times. So there is no proper clear industry valuation coming in. One of the reasons why it's out of favor, this entire industry as well. So concerns definitely comes, but at the middle of it is the company which we are analyzing, KYC. So I'm going to give this a neutral rating as well for valuations, but outlook is something which I like. Management has stated they go with that 15% revenue growth. They're confident of crossing the 1,000 crore revenue mark by FY28. There's a consolidation happening of almost 5 units in Hyderabad. A couple of units from Aditya Birla Group also. Grasim इनका client है. Capacity utilization बढ़ने वाले हैं इन plants का. And there's two important things to say before I close the outlook is the Panipat plant in thin wall and square pack. That is where the sales growth is happening. That's mentioned in the presentation. Whenever you analyze companies like that, be very thorough with your income statement, balance sheet, press release and investor presentation if you are a new analyst and watching this show. But as of now, outlook is strong. Let's give you the entire ratings of how things actually pan out. Largely, we see nothing major is happening in most of the criteria which we are discussing. Return ratios, there is a pressure, but the outlook, that is where I feel there might be some alpha to be made going ahead. Because of that, I'm going to give this company a total rating of 4 out of 8. This is largely in line with what generally we give to a company in this segment. But of course, time for a quick break, and on the other side we'll be speaking to the management of the company, Lakshmana Rao Janu Mahanti. He's the CMD of Moltech Packaging, and a little bit of snippets about him. He has almost 4 decades of experience, and he's not only the founder CMD of Moltech Packaging, he's also for the Moltech Group, and there's one listed company also. I'm sure you know that. That is the Moltech Technology. This is the company we're talking about, and his education comes in interesting from IIM Bengaluru, right from where he started in a small village in Andhra Pradesh. Interesting story, but this story continues just after the break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertising.
Welcome back to KYC, and we are joined in by Lakshmana Rao Janu Mahanti. He is the founder and CMD of Moltech Packaging. Good afternoon, Mr. Rao. It's always a pleasure to have you with us at NDTV Profit, and of course your company is buzzing right now. A lot of investor conferences the company is attending, and that also picked up my interest. But essentially a packaging company, the biggest stress is the high crude prices, but that seems to come off. Once it was 120 and now it is, you could say, almost below that 75 mark. Just wanted to understand what kind of benefit starts coming, because the first quarter of course had a little bit of raw material hit, but since you do a lot of price hikes also because of your bargaining power, what is that entire status looking like? Hi sir. Mr. Rao? Mr. Rao, if you could unmute please. Well, that's pretty interesting take coming in from the company, and I was just reading the overall presentation that was coming in the recent conferences, and across segments, especially the pharma segment, that is where the street is quite bullish on, because one of the major customers, which is the pharma segment, that itself in FY26 a lot of audits are going to be completed. Once the audits are completed, they'll start production. When they start production, they'll need packages. This is what the company will make. Also, the other segments, if we talk about it, especially the paint segment, Asian Paints, that is where the volume recovery is happening, and overall they are going to have a second order effects as well. But now we are back with Mr. Rao. Good afternoon, sir. Always a pleasure to have you. Just discussing about the raw material prices, how volatile it has become. Once it went up to 120, now below that 80 mark. How does it impact your company? And going ahead, how do you hedge all this volatility? Well, it seems like there is a little bit of technical error. Mr. Rao, if you could reply on how the raw material challenges the company is facing and how you are hedging it.
Yeah, raw material prices have shot up in the month of March, but starting now, I hope it will start coming down. But we could successfully pass on the price rise to all the clients across the board, all segments, right in the month of March itself.
Fair enough. But let's go a little bit deeper into that volume growth, how those numbers are looking like in the first quarter, and going ahead, how's the client confidence? Is it coming back from your domestic clients and international clients? How's the client confidence looking and the volume growth outlook?
We are closing the quarter very few days down the line. So I can't give that, but I'm very happy with the numbers that are happening. And especially in the paint, food and FMCG, especially in pharma, our growth numbers are, as per my guidance given at the end of the Q4, and only in the field of lube, due to couple of major players have base oil supply issues during last 2 months. There's a dip in their volumes in lube segment. Overall, I'm very happy the way the company is performing, and I'm sure to impress you with the results beyond my guidance given in the Q4.
And the segmental performance outlook, do you think the Q4 numbers, how it is looking, it will sustain going ahead, or the lube business will be under pressure in the first quarter also?
No, fortunately for us, all these sectors have did well other than lubricants, especially the high value add products like food and FMCG. The growth is in high double digits, and in pharma it is more than 50%, which is a major contributor towards EBITDA. So EBITDA numbers will be definitely surpass our estimates.
A little bit of consolidation is also happening for your Hyderabad plants, and there's the Aditya Birla Group's plants as well. So when this happens, and I know your company is backward integrated also, so for a packaging company, all these important points, as a student of markets or someone tracking the packaging sector, I feel that the margins might go up going ahead. Just wanted to understand, is there any number or the growth in the next 2 to 3 years where these margins benefits start coming in? Mr. Rao?
You might have seen last year we did a very good jump in EBITDA margins thanks to better utilization and consolidation. But the consolidation benefit will accrue more in this year because last year it was hardly last 2 months we got the benefits. But this year, right from April, we will see the benefits of consolidation, which could be, I mentioned in my guidance last time, 2 to 3 rupees per kg at least. And with the increase in pharma and food FMCG numbers, we are aiming a good number, somewhere around 44, 45 for the full year. But definitely, as I mentioned in the guidance, minimum 42, 43 will happen even if, adverse conditions continue. But as of now, for the Q1, we could do very well in pharma and FMCG. And with more accumulation of the pharma clients, now more and more clients are giving us commercial orders. The quantities are increasing and we have to ramp up the capacities during this year itself. And some of the machines and molds are online. And as we are also looking at other high value add products like injectable pens and also semiconductor tray packaging, we have started looking into. That is another area of future, not immediate, but as the semiconductor industry is going to boom in this country in the next 3 to 5 years, we want to place ourselves ready to make the very high precision tray packaging, JEDEC trays or semiconductor trays, which are...
Now, I have a follow-up question on the semiconductor as well. That's a very big, statement by you, and it completely changes the product profile, the margin profile of the company. I just wanted to understand a little bit more. Are you earmarking any amount for it? Is there anything special tie-up for this? Because this requires a lot of technical support, IP support as well.
Yeah, we are in touch with a couple of manufacturers in Taiwan and China because US companies are very huge and they're generally not really interested to partner with an Indian company. There are visits planned in July and August to Taiwan and China to meet some of the probable players who can give their technical know-how or even consultancy. We are talking with them, but it is very initial phase. It will certainly take a year or two to get into that. But our thought process is to get into more and more value-add products. Even in pharma, we are getting into eye drops segment, and we have plans to enter into devices and diagnostic products and widen our product range rapidly in the coming years. So while semiconductor is a different ballgame, it depends upon the way the chips manufacturing happens in this country. We want to tie up with a couple of them. We have initiated talks with a couple of semiconductor companies who are planning to set up shop.
So high margin business for pharma, then we have semiconductor also. That's pretty interesting. But let's go a little back towards the factories. Capex plans and expansion plans going ahead, for the next 2 to 3 years. Any amount is earmarked. What are you doing here?
So for this year, we have tampering down the capex. It will be in the region of around 90 crores, out of which 30 to 40 crores will be the maintenance capex, and the rest will be for pharma and these new projects what we are envisaging. Maybe trial molds for ophthalmic drops have been already successful. Now the commercial molds are getting ready. By December, we hope to get into market with that product range. And for the pens and devices, as I said, it is a 2-year plan, and probably in 28 we'll be able to come out with a model with a proper IP right and all that. So on these segments, we are at a drawing board stage now, both semiconductor trays and pens. I would not like to talk about those investments for the next 2 years at least. Probably in the year 27, 28, investments will start in those segments. And we don't have a rough sketch of the numbers that probably towards the end of this year we'll be able to spell out.
Mr. Rao, that's a pretty interesting take you have taken for the semiconductor portion. But I want to understand the debt levels also. What are the debt reduction plans coming in for the company? Or do you think that you'll be taking more of debt for these expansions? Because debt at times is a overhang in your industry. Just wanted to understand your view on that.
If you notice across the industry and different industries also, we have one of the lowest debt equity ratio. I think our borrowings are hardly 0.2 times or 0.25 times the equity. So debt equity is hardly 0.25, which leaves a space for borrowing when it is needed for big projects. But today, as I said, this year, 26, 27, the consolidation is more important, and bringing in numbers in Panipat, which is north area, and Cheyyar, again down south, is where we are focusing for the core business. And in pharmaceutical, we'll be entering into several new products, maybe in this year. At least 4 to 5 new products we'll introduce. And next year, we'll be focusing on different.
Right, Mr. Rao. Thank you very much for giving your time to NDTV Profit and giving us the entire 360-degree picture for Moltech packaging. And that's pretty interesting. Folks, that's all for tuning in to KYC only on NDTV Profit, and for interesting stories like Moltech packaging, where they're trying to talk about semiconductor or entering high-margin pharma businesses. Stay tuned with us. Bye.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You've got to be real in a world of real. You've got to be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Dalal Street gears up to end the truncated week with a show of strength. Nifty hovers about 24,200. Sensex gains more than 600 points. Auto, realty lead gains. Metals and oil and gas on the back foot. Swiggy Instamart is seeing another round of senior level exits. Sources have told NDTV Profit that Chief Operating Officer Ankit Jain and Chief Business Officer Hari Kumar have resigned from the quick commerce platform, adding to a series of leadership departures since the company's listing. Brent crude has wiped out all its wartime gains, falling below pre-conflict levels as tanker flows through the Strait of Hormuz normalize, and of course progress in US-Iran peace talks ease supply concerns. In an NDTV Profit exclusive, Iranian oil minister is likely to hold talks with Indian officials today. India weighs return to crude imports, both nations to discuss cooperation in the oil and gas sector. Commerce Minister Piyush Goyal and US Trade Representative Jameson Greer reviewed progress on the proposed interim trade deal, with talks focusing on market access, supply chains, digital trade, and deeper cooperation in emerging technologies. Tractor demand is holding up remarkably well despite concerns over a possible Super El Nino. Data shows registrations have stayed strong through the first quarter and are already running ahead of the last year's pace, underscoring rural resilience. Good afternoon, you're watching Markets at 12 with me, Mahima Vachhajani, and this is a show where we get you updates on the top buzzers and news updates at noon. But first, let's take a quick look as to how the markets are doing at this hour. The Nifty 50 almost at its day's high point, trading at 0.9% higher, above the 24,200 levels, and hopefully this positive momentum should continue by the time we end today's trade, up by about 200 odd points. Let's try to pull up the heat map and see as to what are the counters that are positively contributing to this. The top most counter is Interglobe Aviation, up by about 4.6 odd %. Maruti Suzuki also up 4.5%. You have Max Health, Mahindra & Mahindra, Larsen & Toubro, Eicher Motors, Shriram Finance, SBI Bank, all of these counters doing fairly well, and that advanced decline ratio on the Nifty 50 also looks very healthy. On the flip side, you have ONGC, Coal India, Titan, SBI, as well as SBI Life Insurance, as well as Tech Mahindra are the ones that are seeing some pressure in trade today. Let's try to pull up the Bank Nifty, because that is also hovering above the 58,600 levels, up by about 0.8 odd %, following the Nifty 50 rally as well. A good 460 odd points of an uptick is what we're seeing on the Bank Nifty at its day's high point as well. Just curious if we can try to pull up the constituents on the Bank Nifty to see as to whether it's a private bank or PSU banks that's leading this rally. To see, there you go, there's SBI, ICICI Bank. So it's a mix of both private and public bank, but largely it's ICICI Bank, HDFC Bank, Kotak Bank, which are leading the private space, and SBI and PNB the public space. But there's only 3 names in the red as we speak. Just AU Small Finance Bank seeing a downtick of around 2 odd %. Let's try to pull up the sectoral heat map to see as to what sectors are doing at this hour. You have Nifty Auto, of course, topping that chart with a lot of names that we saw in the Nifty 50 also trading higher, with M&M, Eicher Motors, Maruti Suzuki, etc. Followed by Nifty Realty, where there's good action coming in, up 1.8% as well. You have consumption also doing fairly well. It's only the metal and oil and gas which continue to be under red, and energy slightly in the red, hovering here and there. Let's try to pull up the mid cap 150 and the small cap 250 as well. Underperforming the benchmarks, unfortunately, the broader markets. The mid cap 150 is up by about 0.2 odd %, and so is the small cap 250, which is largely flat now, significantly off from its day's high point. The advanced decline ratio, quickly, if we can try to pull that up, there you go. You have around 1,200 odd advances versus that of 1,369 odd decline. So more skewed towards sellers in the market. The BSE 500 quickly before I go on to our guest for the day. You have a lot of footwear names, textile names that have been doing well because of the UK FTA news. Relaxo, Motherson Wiring, Aegis Logistics, HFCL, Sterlite, etc. are the ones in the green. But on the flip side, you have Bandhan Bank, CSB Bank, Rajesh Exports, TCI Express that continue to be under pressure. So that's the mood of the market. But let's also try to understand from Anil Rigos, founder and fund manager at Right Horizon PMS, joining us now to get a sense of what we can expect from markets going forward. Anil, a very good afternoon to you. Mahima this side. I think we've got some technical glitch with Anil right now in terms of network issue, but we'll bring him back most certainly. Like I was saying, let's try to pull up the BSE 500 because, a lot of specific names. You saw Sterlite Tech there. You saw something like an HFCL, which have continuously hit upper circuits, and there's no stopping to these counters. But on the flip side, you have something like a Rajesh Exports, where there is no relief coming in when it comes to the lower circuits. Plus, Bandhan Bank is the other one where we are seeing quite significant amount of pressure in trade today. CSB Bank is also the other name. Apart from the way banking names are moving, these are some of the names that are under pressure. There's Prince Pipes, as well as Supreme Industries, which is also seeing a downtick from 3% odd. But like I said, we mentioned this in the headlines as well. Tractor demand continues to show resilience despite concerns around a possible super El Nino. Registrations have remained strong through the quarter, already surpassing last year's pace. Let's go across to Danish to get us more details on the numbers, especially on tractor registration data. Danish?
Well, despite concerns around Super El Nino and its overall impact on India's agricultural output, we are seeing that in QI FY27, the tractor registrations as per the Vahan portal have been quite strong. Till the 24th of June 2026, the numbers of these registrations have crossed the previous year's numbers. As per the data available on Vahan website, till the 24th of June, the tractor registrations have crossed 2.28 lakh units, and this is the overall figure of the first quarter of this fiscal. And if we compare this with the previous year's numbers, the previous year we saw that in the first quarter the overall tractor registrations reached 2.12 lakh units. And if we specifically talk about the first 3 months of this fiscal, we are seeing that on an average the tractor sales have been coming over 70,000 units every month. In fact, in the last month, we saw a tractor sales crossing 80,000 units, and is expected that even in this month, the tractor registration might cross 80,000 units, and this will happen for the second month in a row. So all in all, if we see, despite the concerns around Super El Nino, the tractor registrations in India are quite strong, and it is expected that in the first quarter of this fiscal, the tractor registrations might reach a double-digit growth.
All right. Okay. So that's the overall update coming in with regards to where the tractor sales go. But in an NDTV Profit exclusive, Iran oil talks are back as Minister Mohsin Pankejad is set to meet Indian officials. Discussions will focus on boosting energy cooperation as India weighs resuming, crude imports. Now, National Iranian Oil Company reaches out to Indian refineries traders, but caution prevails amid US sanctions uncertainty. My colleague Sesa Sen joins us with more details on something that she picked up. Sesa?
Right, India and Iran are set to hold discussions on energy cooperation, with Iranian oil minister set to meet officials from the Ministry of Petroleum and Natural Gas in Delhi. The talks will essentially focus on expanding bilateral cooperation in the oil and gas sector and exploring investment opportunities. Now, the talks come as India is evaluating the possibility of resuming imports of Iranian crude oil. Sources also say that the National Iranian Oil Company has reached out to Indian refiners and traders as Iran looks to regain its share in India's crude flow mix. For context, Iranian crude accounted for 10.5% of India's total oil imports in 2018. India halted imports from Iran in May 2019 after tighter US sanctions were imposed. Again, Indian refiners imported about 4 million barrels of Iranian crude in April this year, which comes after a gap of nearly 7 years. Now, however, no Iranian oil came to India after that. Now, industry sources indicate that Indian refiners remain cautious and are awaiting greater clarity on US sanctions before committing to larger orders. Payment mechanisms and logistics, continue to be key concerns, making any large-scale return of Iranian crude to India unlikely in the near term. Industry insiders also say that future imports will depend on commercial viability and clarity over sanctions waiver beyond the 60 days. Now, analysts do expect a measured approach from Indian refiners, with any broader revival in Iranian oil trade likely to be only gradual.
All right, Sesa, thank you so much for getting us those details. We'll keep a track of that story and, of course, bring you all the updates. But moving on, a bunch of other counters are also, buzzing in trade today, and we have Shivam joining by to give us a perspective on what is buzzing and why. Shivam?
Yes, first stock in our list is the Infosys, which has partnered with Centera to scale enterprise AI in healthcare segment. And with this partnership, the focus will be on improving the efficiency across IT, hospital operations and clinical support. Also, this will leverage the Infosys Topaz for AI-driven transformation framework, and this will aim to embed AI across the management workflows. Also, it is expected that this will enhance the patient experience and staff productivity. Second stock is Deccan Gold Mines, which has announced the launch of Jonagiri gold project in Andhra Pradesh with 1,000 tons per day capacity. Now, this marks the transition from exploration to commercial production stage, and currently it processes around 1,000 tons per day and produces around 400 to 600 kilogram of gold on an annual basis, while the expansion is planned for the processes to up to 2,500 tons per day, and the output is expected to exceed 1 ton per year. Now, also this is seen as a key step towards the boosting domestic gold production and reducing the dependency on gold imports. Third stocks are the Apar Industries and Shanti Gold, and both of the companies have scheduled their board meetings on June 30 to consider capital raising through equity and debt.
All right, Shivam, thank you so much for getting us those details on all of these names that you just talked about. But we were trying to get in Anil Rigo, founder and fund manager at Right Horizons PMS. He's back with us now. Anil, thank you so much, first of all, for taking out the time. Mahima this side. My first question to you is, with regards to how market sentiment is, right now, at least some days out of, so many days, we're seeing buying action coming in from FIs, though the number is very small, but that indicates something, right? Just want to get a sense as to what you are picking up. We are, at the day's high point, above the 24,200 levels. Do you think that these levels could sustain from here on, or do you think that there could be some profit booking that could follow through?
Yes, definitely. It's been, FIs coming back after some time, and they've been reasonably large sellers, but that has also been our point of view. When, let's say you have extremes in terms of, outflows and for an extended period of time, then typically at some point, it turns back. So it's not surprising. However, we believe that it's something that will happen over a period of time, and hopefully will expand from there. Now, coming back to, markets as a whole, yes, we've seen a reasonable rally from, say, this beginning of this financial year. So especially in, say, mid and small cap stocks, and small caps have really, many of them have flown away. So to that extent, yes, you could see some bit of profit booking coming in on a shorter term basis. But I believe, a rally like this, typically it's been the start. So you should see it extend for a period of time. Definitely, everybody is looking for, global cues. We expect that also to settle down over a period of time. And but there will be news flows coming in at various points of time as negotiations continue to happen at both sides, and that is something which will, I think, keep markets a little bit volatile in the short term. So I believe that so medium term, let's say over 6 months or so, one is reasonably positive on it, but be ready for some of the short term moves there. So one thing that is catching the eye, and we are watching that closely, is say, interest rates in the US, especially the 2-year G-Secs in the US. And that has been coming up, and that is something that one would like to watch out for. Also, in terms of the dollar, versus the other basket of currencies, it has been sort of weaker. But we're also watching that for any cues on whether there's a things are back to normal. A depreciating dollar will definitely be good for emerging markets. So all in all, medium term positive. Short term, we still think that there will be some bit of volatility.
Sure. Anil, the other aspect is with regards to the volatility that you talked about, right? Despite of the volatility, we've seen some pockets of strength. In the last 1-2 months or so, in fact, even beyond that, we've seen, pharma names doing so well. We've seen defense names doing so well. Even certain banking names also doing so well, right? So going forward, because now we've seen some profit booking coming in the defense names, in the pharma names as well, because they've significantly run up. What are the pockets of strength that you're identifying, and what could be the bets that you are looking at going forward?
I think all of the sectors you mentioned, we believe will continue to do well, and that will continue. But what are the other places that we like? We like places including the hospital side within healthcare, if you ask me. And to some extent, it should not be impacted by any global upheavals there. So to that extent, it also becomes a hedge for you from any global upheavals. The other part of it is we like the EMS, the electronic manufacturing services that companies provide. So that's also in a secular trend, and that should also do well. Our own sector, which is wealth management, is something that we also like, and capital markets as well. And to that extent, they have also run up, so there could be some bit of profit booking. But we continue to believe, I think these are the places to continue to have your money.
I think the other aspect is, when I was trying to look at some mid-cap names and small-cap names, though today they're underperforming the benchmarks, but largely the mid-cap has recovered almost 17-18% from its low point. The small-cap has also recovered almost 25% from its low points, right? If you are looking at these particular sectors that you just talked about, where is the action more? Would you be looking at some mid-cap names, small-cap names versus the large-cap names? How would you place it?
Yes, so actually, interestingly, we took a contrarian call sometime in February where we looked at, relative performance, and it had reached extremes in terms of, underperformance. Typically, from an excess alpha, you have a negative alpha, and that is what, we saw. And our view was that, it reached a tipping point and it should come back. And from there, we found that, small caps outperform, mid caps outperform, and small caps especially, right? Because they were really battered down and beaten down, especially the smaller companies. And so what we are seeing is sort of in line with our view that, there are battered down sectors and it's gone to extreme levels, and from here it should bounce. Along that, we looked at and we saw, earnings growth also coming back. And so, and that gave us a lot of confidence that yes, small caps and mid caps are likely to do well. So, and I think it will continue to do so because these rallies are not so small, right? It's not just a 1 month, 2 month type of rally that you see. You typically see the cycle last almost like a couple of years. And, from a period of negative alpha, it's come back to sort of almost equal, and it'll probably then go back to excess alpha. And, sometimes in periods of time in a cycle, their excess alpha can even be 40% excess alpha over, say, the large cap index and that's how small caps are. So broadly, yes, one will continue to bet on them, but considering some bit of global news and cues, etc., I think you have to be cautious in terms of the type of companies that you invest in. Look for companies that, have a good earnings growth capacity there. Avoid ones which are more, value ones, which you suddenly feel that, okay, will, really come up. And sectors that sort of could be impacted, just be watchful for from the global, volatility and uncertainty. But other than that, I think mid and small will continue to do well as long as you are careful and looking at the companies carefully, and their financials and how they are growing their earnings.
Right. Okay, Anil, thank you so much for taking out the time and giving us that entire perspective. And it makes sense of what you just said. So thank you so much for taking out the time. But let's also shift focus and take a closer look at Oracle Financial Services. Now, this is a stock that's clearly, has been clearly bucking the broader IT trend. While the Nifty IT index has seen a sharp correction over the past 1 year, this particular counter has delivered strong outperformance across time frames. So what's driving this resilience, and do valuations still justify the optimism? Let's bring in Jasmeet for more details on this one. Jasmeet?
Well, Mahima, thank you for that. As rightly said, this one particular stock is basically swimming against the tide. So let's quickly pull out the overall performance and understand how the stock is performing against the Nifty IT. Look at the overall Nifty IT is around 5% over last 1 month, but OFS has gained nearly 10%. It gets interesting over the next 3 months, given that the OFS are nearly up about 68%, 58%, while Nifty IT is on 7%. And over last 1 year, Nifty IT is on 30%, but Oracle Financial Services gained about 15%. Now we do see the overall up move because of few of the reasons. Let's quickly understand the top 5 key reasons why Oracle is gaining in trade versus the Nifty IT, the other peers tanking in the trade. While the first one, the company has majority of its revenue coming with the product business. That's the main reason why the company is not tanking, because it's not in the service business altogether. And we see all the margins of the product business are very high at 50%, and even that has been growing at a healthy stage of 12%. Where we see Nifty IT companies growing at a growth rate of 2 to 4%, and Oracle is growing at a rate of 12%. Well, the second reason, the company does have recurring license fees, all the maintenance, and also which provides an high cash flow for the company, given the company keeps on getting the same contractual revenue every quarter. Now let's look at the third reason. If you look at the overall banking space, the company operates in the core BFSI space, and we have made a note that over last 3 years, though we had so many headwinds on Nifty IT, but the BFSI has been a major game changer, and it has been strong over the companies. And Oracle, this company has majority of the revenue from the business services, given it operates as a core business licensing partner. And that's the reason why the stock is gaining in trade. Let's look at the fourth key reason for this particular counter. While the company shifts to the Oracle ecosystem, given Oracle is a global company, so companies moving towards Oracle Financial Services gets easier for them to be in the Oracle ecosystem. While the last reason why the stock is gaining is, if you look at the overall order book for the company, the record RPO, that's what they call, is nearly at 7,000 odd crore, which basically strengthens the revenue visibility in the coming quarters as well. Let's quickly look at the valuations of this particular counter. Now, Oracle Financial Services stands nearly at 34 times the PE ratio with the current ratio. Well, if you look at the 5-year average, it's nearly at 25 odd times. So the current ratio is on the upper side, it's above the 5-year average, but for the Nifty IT companies, the PE ratio is below the 5-year average. Well, that's a very interesting change to watch out for. And Nifty IT current valuations are nearly 12 to 10 times, but Oracle at 34 odd times, showing the premium it has compared to the other folks. Last time, when you look at the overall buy call for the analysts, the stock is tracked by hardly 2 analysts, and they have a return potential of almost 4 odd % from the current level. So it's a wait and watch. How does the Q1 pan out for the company, and how long does stock rally? The stock has gained about 4 odd thousand from the recent lows.
Okay, Jasmeet, thank you so much for getting us those details. Interestingly, look at an interesting counter to look at, most certainly, because it has gained significantly from its low points. But the other fact is that Noel Tata has rewritten the retail playbook, right? As he retires from Trent, it's important to take a look at what contribution he's made to Indian economy, as well as to how retail has grown in India. He opened his first West Side store in 1998. He sold Lakme for 200 crores to HUL, and One Little Woods is what they'd acquired and named it as West Side. It was a little store, UK-based retail store. They played the 100% private label, part from day one. Competition did do multi-brand, but Trent did not. Zudio was a master stock. 2016 is when they launched it, 100% private label at affordable price points of around 1,000 odd bucks, and tier 2, tier 3, tier 4 cities is where they focused on in terms of expansion. They did not foray into e-commerce, stuck to the brick and mortar model. Plus the number game, that's an interesting one. FY14, 1,300 crores in terms of revenue to now 20,000 plus crores in FY26. Profits from 130 crore in FY14 to around 1,700 crores in FY26, and the 80 West Side stores in FY14 versus that of 300 plus stores of West Side in FY26, and Zudio, which was launched in 2016, from 0 to 960 stores, as last reported in FY26. The market cap has also gone up from 3,400 crores in 2014 to almost 1,73,000 crore as we speak. Lastly, in terms of targets that he's left behind, West Side potential of 700 stores going forward from around 300 stores right now. Zudio 5,000 stores from 960 stores right now, and the 2023 dream of 10x in terms of revenue growth is something that they've maintained. So that's, of course, the way Trent has grown, under the leadership of Noel Tata. But for that, viewers, completely out of time on this edition of Markets at 12. But do stay tuned to NDTV Profit for more news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on.
Hello and welcome to Trending Stocks on NDTV Profit. Now, Tata Motors, that's a stock that is in focus today. In fact, my colleague Puneet Javedi, who's at the round table with the management, and this is the media media conversation post their Investor Day. Let's listen in to what Girish Wagh, MD and CEO at Tata Motors, had to say.
Largely continuing because you've given a 40% kind of a market share, and something that you've spoken about in the past as well. You ended at almost 35, 36 on, and I think you mentioned the slide that you're at 37. But just in terms of that growth, do you think it's a little aggressive going into 2028, given some of the factors you spoke about, a very high base for H2 as well? And how are you seeing competition? Because in certain segments like ILCV, you've seen some market share decline also because competition has increased. So you had new launches, you mentioned that at the start of the year, but so has had the competition. So what gives you that confidence of that high growth for the next 2 years to get to that 40% target?
Yeah, so see, two things. One is you said aggressive target. Yes, because, one has to set aggressive targets in the organization, right? That is number one. Number two, what gives us confidence? I think and I also mentioned it on the Investor Day, it appears many of you were logged in probably. I didn't know, Swaraj, you followed the whole Q&A also. But I think, our focus is on now clear pricing discipline, clear customer value creation, and whatever pipeline we have in terms of products and turnaround, if I may say, that we have done on the service delivery using Heatedge. I think we are in a good position, and we must therefore leverage these capabilities into finally market share. Let me, however, clarify that none of this market share come at the cost of pricing discipline, etc., not at the cost of the financial fitness. That will remain given, right? Over and above that, we have set aggressive market share targets with a perspective of customer value creation through better products and better service.
Just a supplementary in that, because you've also spoken about, apart from the sales, the whole network to help you get to that as well. And you also spoke about electric vehicles, CNG also to help you drive. So are you currently already seeing that incremental growth coming from these EV side of things as well? And is that visible in the higher tonnage MLCV side also? Is it a little early and will be more back-ended probably in 2028 where you see that growth coming?
Very good question. I think, if you look at alternate fuels within the larger this thing, and take, for example, small commercial vehicles, our share in electric and CNG, for example, is higher than that of diesel. Anyway, and therefore, this movement towards electrification, CNG, will be beneficial for us, helpful for us. And I think probably our investment ahead of time in the new products, etc., is also helping. I think your read is also perfect on heavier truck side, whether electrification and numbers will be more back-ended. Yes, it will be. And let me also add the penetration in percentage in heavy, medium commercial electric vehicles will be much lower than that of small commercial vehicles. But it will still be meaningful. Because why I'm saying it will be meaningful is because there are quite a few end-use sectors who are getting into it. And suppose, take e-commerce, you take mining, you take steel, cement. These are big consumers of commercial vehicles. And if a lead customer is able to see value and we create that value proposition with that customer, others will follow. And therefore, I see that high salience end-use sectors getting into electrification, it may be 1 or 2 or 3 customers, but is quite significant because once they prove it, others will follow. So in terms of overall numbers, it will be low, but actually it is quite meaningful. And buses, of course, all of you know what's happening in buses.
Well, as the stock is also doing well, Tata Motors CV, the stock up more than 4%. But coming back to the markets, for the second straight day, we are seeing a good technical momentum. Pick up Nifty bang. We are seeing a good up move coming in, but a slight minor dip coming from the day's high, but nothing major sell-off. Remember, there is a Sensex expiry also at play. But let's try to figure out what are the key factors you should be tracking right now in the markets right now. First of all, of course, you can see the risk-on sentiment is back in the market, and the strong technical up move is coming in for both Nifty and Nifty Bank. We're seeing a sea of green coming in. The Nifty resistance range has been pushed up 24,300 to 24,700. I've given a larger range. Nifty Bank also the same story plays out, 58,700 to 59,200. That is where the action is happening. Also, the benchmark indices are outperforming SMIDs, and this is something we are seeing for the second straight day. Is it index management or the large cap interest is back amongst the larger buyers? That's something to watch out for. Also, oil has sunk to its pre-war levels. That's a very important data coming in. It's also aiding sentiment for emerging markets like India. Dollar stands tall. It's on the dollar index is almost 13-month high. Metal gold is seeing a sell-off, and that's continuing, of course, but the rupee has rebounded, and that's a good portion. Maybe RBI interventions are at play. European stocks, they're set for a positive opening, but long weekend is here. Why? Because the Indian markets are closed tomorrow on account of Muharram. So definitely we have a truncated week of trade. So this is the entire picture for the markets, but things are looking pretty decent, especially for the large caps. Hiral.
Okay, so things looking pretty decent, but we're off the day's highest point. So that's the key conversation. And as Sharad was mentioning, there could be some bit of profit booking ahead of that long weekend. So people would be taking money off the cards as well. But on the watch list, Sterlite Tech, they've launched their QIP. The floor price is 613.69. That stock is in focus. Footwear stocks are seeing a strong move in today's session, from a Bata India to a Relaxo, all of them buzzing in trade. Indigo gains over fall in crude prices. In fact, that probably is the stock of the day that we will be focusing on as well on NDTV Profit. Tata Chemicals in focus as well. Auto stocks are looking good on the back of the Vahan data, which is indicating good amount of strength in the month of June. Talbros at a 52-week high. Metal counters have slipped further in trade, and this is on the back of the pressure that you're seeing on LME across metal categories. ONGC Oil India, they've sunk in, and this is because you have crude that is at pre-war levels. LIC, the CFO resignation is what is putting pressure on this counter. Jewelry stocks are in focus as well because gold is now at a 8-month low. Bazaar style retail stock under pressure. You have Embassy, that is in focus as well, and this is because of the MOU that they've signed with the UP government. HFCL is up 250% in 6 months. Max Healthcare, Adani Enterprises also seeing some strong volumes. Adani Enterprise, in fact, at a 52-week high. So that's the watch list. But over to you, Sharad, to take the rapid fire with Sachin Janardhan Sarvade.
Thanks a lot, Hiral, for that. Good afternoon, Sachin. It's always a pleasure to have you with us at NDTV Profit. We'll start our rapid fire round. And of course, the first stock is coming in from the QIP issue, which has opened up for this counter. Sterlite Tech. Of course, there's a good momentum happening, and the volumes have also picked up. Your views on it?
The overall trend for the stock is up, even the structure and the momentum is up. So in all the 3 time frames, basically daily, weekly and monthly. So buy on dips will be a very good strategy for the stock.
Sachin, after a long time, we're seeing footwear stocks back. Of course, the numbers were pretty strong in the last quarter. We have seen a little bit of reversals. Relaxo, Khadim, Liberty, all of them doing really well. Do you think it's a good time to enter these stocks, at least on the weekly charts? Or this is just a dead cat bounce or a flash in the pan?
So because all the footwear stocks which you have named currently, including Bata as well, the trend for the stocks are down on a daily time frame, and on a weekly time frame as well, the structure is not good. So profit booking will be a good idea if someone is getting a profit.
Right, profit booking right now for the footwear stocks. Another stock, Interglobe Aviation, of course, the benefit of lower crude prices is falling for most of the crude sensitive sectors. Do you think more further up move can be possible in this counter now?
So yeah, if we see, it has given a 10-month falling trend line breakout, and if it is closing above 5450 today, then we can see 5800 and 6000 levels on the upside in Indigo. So yeah, definitely if levels mentioned, if we are getting a closing, we can see a good upside in this stock.
And Sachin, your views on Tata Chemicals, a good up move coming in, and we'll get you the reason also for that fundamentally. But in the levels, on the charts, what is it suggesting?
So today it made a high of around 775, which coincides with 200-day EMA, and we have seen some kind of profit booking. Overall trend for the stock is down. Again, if it is closing below 730 level, then the trend will shift again towards the downward level. So if someone is getting profit, please book profits.
Right, and auto stocks, especially the CV stocks, the buzz in the street is that the numbers are going to look pretty strong, especially the ones in the commercial vehicle segment. How are the auto stocks looking? You know, we have M&M, Maruti, all stocks doing well in trade. Is there a good trade to be made from the current levels also?
So Tata Motors CV has given a current breakout. It has breakout from the 4-month trend line, and today also with volume it has gone up. We can see at least 460 and 500 levels on the upside.
Right, and your views on jewelry stocks such as CSB Bank, because gold is falling now and the reversal of trades have started coming in. Do you think there is a further chances of fall, and if yes, any short positions can be taken?
So if someone wants to play jewelry stocks, the safest bet will be the Titan, and buy on dips will be a good strategy instead of shorting. So that what we can see, because the trend of the stock is up and the structure is also good, at least more 2 to 3% correction if you are getting, that will be a good demand area to add on.
Right, that's the end of the rapid fire round, but folks, I had told you about Tata Chemicals, why the stock is up. To decode that, we are joined in by Varsha. Varsha, there's a lot of mathematics at play here. Could you just simplify it for us?
So the Tata Chemicals is up. This is because of the change in RBI, or rather I would say after RBI rule change. Now, if you see, the market is actually reacting to possible value unlocking seen when Tata Sons list. Now, what RBI has done, RBI have tightened rules for large NBFCs with 1 lakh crore or more assets now will be treated as, upper layer. Now, these companies face stricter regulations and may have to list within 3 years. Now, why Tata Sons is in focus? Because Tata Sons may fall in this category, and this means that it could be forced to list in next 3 years. Earlier, Tata Trust had opposed listing, but now because of this RBI rule, they may have to list. Now, why Tata Chemicals is in focus? Because Tata Chemicals, if you see, owns 3% stake in Tata Sons, which stand at around 20,000 odd crore. And if Tata Sons list, there will be more value unlocking when it comes to Tata Chem, and hence you're seeing stock is up almost, though it has come down, it was up almost 6% in trade.
Thanks a lot, Varsha, for that. A very complicated setup, but then she simplified it. Thanks a lot. But of course, we had discussed earlier Tata Chemicals, but I would like to get an SBI chart. If you could just fire that on. CLSA has come out with a kind of a bullish report coming in, and on a long-term basis, they are quite bullish, especially on the NIMS front going ahead. And right now also in the day's trade, slightly up from the day's high, it's down, but still up almost 1.5%. Sachin, your view for SBI right now, after a long time, the foreign brokerages have turned bullish. Do you think now sustained up move can start coming in for SBI now?
So in banking sectors, I love PSU Bank, and in PSU Banks, SBI is also one of the strongest stock. It has made a good base near the 200-day EMAs, and we have seen right now the breakout of the rounding bottom pattern. So we can see good upside in this 1100 and 1200 levels on the upside.
Okay, so that's with regards to where, SBI goes. But moving on, let's just quickly address the flashes at the bottom of your screens as well. You have S&P Global, which has actually upgraded Adani Ports to a BBB, and the outlook is stable, is what they've maintained. Let's pull up that one on the screens and see what Adani Ports is looking like. An upgrade coming in from S&P Global to a BBB. In fact, the rating has been upgraded from a BBB negative. That's a positive coming in there. And in terms of the outlook as well, they've given it a stable one. That stock probably trading pretty much flat as we speak. Sachin, let me take a quick view with regards to where Adani Ports is concerned.
So Adani Port, we have seen overall the trend for the stock and the structure momentum is very good. One can buy on dips anytime, like around 1700 is a very good demand zone. One can add at that levels, and the targets will be newer highs lies around 1900 and 2000 levels.
With regards to where Adani Ports goes, in fact, just a quick disclaimer, Adani Ports, NDTV Profit is an AMG Group company which is owned by Adani Group as well. But let's take a closer look at Oracle Financial Services, a stock that's clearly bucking the broader IT trend. While the Nifty IT index has seen a sharp correction over the past 1 year, you have Oracle Financial Services, which is also at the day's highest levels right now, which has delivered a strong outperformance across time frames. Let's pull up a 1 year chart. If we can even have a comparative between Oracle Financial Services and the IT index, that will tell you the story. 40 to 43% growth is what we've seen. But let's understand what's driving this kind of resilience, and are the valuations still justifying the optimism? Jasmeet brings us more details. Jasmeet, what do you have for us?
Hi, Hiral. Thank you for that. As rightly said, Oracle is the only stock that's swimming against the tide that we have seen Nifty IT. When Nifty IT is down about 30% over last 1 year, Oracle has single-handedly gained about 58% in just last 3 months. So that's something to watch out for. And here are the key reasons actually why Oracle is doing so and how is it able to gain so much in trade. Well, the first reason, the company is product-led. So majority of the revenue for the company, almost 90% comes from the product business, and the product business of the company has a very high margin of nearly 49%. That's a major reason given IT companies are service oriented, and the AI overall fear impacts the service companies and not the product company. That's one. While the second one, the company has a high maintenance fee and license fee where the recurring revenue becomes a key positive for the company over coming time, which also shows visibility going across and going ahead. While the third reason for the particular counter is the company operates in the core banking space. So we have already seen over the last couple of years, though we had so many headwinds for Nifty IT, but overall BFSI space has stayed resilient all this while, and the company as operates in the banking sector, that's a key positive for the company, and that's holding up for the counter as well. Now, in terms of the other key aspect, the Oracle Financial Services is a part of Oracle systems, and when a company operates under the Oracle system, which makes it easier for the clients to adopt and be a part of Oracle ecosystem altogether. While the last one, the company's order book is standing at roughly 7,000 odd crore, which is showing a strong visibility going ahead. Now, in terms of valuation, well, this becomes a key question. Given the Nifty IT companies are currently trading at a valuation of 10 to 12 times the current valuations, and they're below the 5-year average, but Oracle is trading at a 35x valuations, which is high, way higher compared to the Nifty IT companies, and currently trading above the 5-year average. This is the only stock in Nifty IT sector altogether which is trading above its 5-year average when you look at the mid cap and large caps. Now, in terms of the overall analyst buy calls, at this point in time, there are 2 analysts that track this counter, and the return potential is 5% on the current levels.
Okay, so that's Oracle Financial Services, an interesting one. Thank you, Jasmeet, for that. In fact, Nandish Shah of Wealth Management, Motilal Oswal Financial Services joins in. Nandish, welcome to the show. Always a pleasure to speak to you. We are talking about this one counter. I'm not sure if you have coverage on it, but when the entire IT sector has been ruling under pressure, you have a Oracle Financial Services which has actually delivered returns of over 40% in the last 1 year. How would you differentiate this counter and your views?
So we don't have a coverage on Oracle Financial Services, but whatever I've read through Oracle and the other IT companies, majority of the revenue which Oracle gets from in India, at least, is from a software product company. And slow and steadily, they are also getting their licenses revenues, which is more like a recurring revenue, and where the margins are much higher as compared to some of these IT services company. So that is where the maximum profitability for Oracle Financials lies.
Okay, so that's your view overall. But in fact, you have a Bank of America also has initiated coverage on select mid-cap IT names. Jasmeet is still with us to take us through. Jasmeet, what is Bank of America actually indicating?
Right. Well, thank you for that. Now, if you look at the overall mid-cap space, it has been an interesting play all this while. Initially, we did see that the mid-caps were at a higher valuation. Then over the time, mid-cap valuation also tanked at the lowest level. Now, this brokerage has given out the overall IT space where they initiate coverage on Coforge with a target price of 17.25 with the initiate buy. And it says a jack of all trades positioned to shine low growth industry pays as well. And Coforge has been a lot of favorite of a lot of investors as well. While the second one is emphasis, they initiate neutral on this particular counter, target price of 2,440. and they say the profitability is unlikely to exceed the band which they are currently operating in. While the third one is persistent, they initiate underperform on this particular counter. They're negative on this, and the target price is rupees 4,875. While they say they have differentiated a lot, while for the sector cross road have still upside for the company going ahead. While the last one is LTM, while they initiate underperform on this particular counter with a target price of rupees 3910, and what they say is the trigger for next half are still demanding. So they have been a bit bearish on the mid-cap IT space. That's what we are interpreting from the report.
All right, thanks a lot, Jasmeet, for that. But looking at the tractor numbers, the registrations for the month of June as per Vahan data, seems like the story is very different as what everybody was fearing about the El Nino risk. And to decode that, we are joined in by Danish. Now, Danish, what is the key update on this data?
Well, despite concerns around Super El Nino and its overall impact on India's agricultural output, we are seeing that in QI FY27, the tractor registrations as per the Vahan portal have been quite strong. Till the 24th of June 2026, the numbers of these registrations have crossed the previous year's numbers. As per the data available on Vahan website, till the 24th of June, the tractor registrations have crossed 2.28 lakh units, and this is the overall figure of the first quarter of this fiscal. And if we compare this with the previous year's numbers, the previous year we saw that in the first quarter the overall tractor registrations reached 2.12 lakh units. And if we specifically talk about the first 3 months of this fiscal, we are seeing that on an average the tractor sales have been coming over 70,000 units every month. In fact, in the last month, we saw a tractor sales crossing 80,000 units, and is expected that even in this month, the tractor registrations might cross 80,000 units, and this will happen for the second month in a row. So all in all, if we see, despite the concerns around Super El Nino, the tractor registrations in India are quite strong, and it is expected that in the first quarter of this fiscal, the tractor registrations might reach a double-digit growth.
Thanks a lot, Danish, for that. And Nandi sir, I just wanted to understand, there's a good up move coming in most of these stocks in the tractor-related theme. But this is a very big surprise. The street was scared about the El Nino, but seems like there is some kind of a good buying momentum coming in this segment. How do you see this?
So because of very high oil prices and also because of very macro risk, so there was a fear on the street that especially the tractor segment is likely to grow in mid to high single digits. And what is a post GST, we have seen that most of these numbers have been upgraded, and especially M&M and Escort both have reported double-digit kind of volume numbers. So once all these fears has dissipated because of lower crude oil prices, we are likely that this kind of growth is likely to sustain at least in the first half of FY27.
Regards to where the tractor companies are concerned. Another stock that has been buzzing, let's just pull up a Indigo and pull up a 5-day chart of Indigo to see the kind of story that is playing out, because you have crude, which is now gone to pre-war levels, which is one of the key positives that you should be tracking. But almost 8 to 9% is the kind of surge that you've seen as well. Nandesh, how are you looking at playing a Indigo right now? Because things have started to come back together for an aviation company. With the kind of surge that is coming in, would you advise investors to actually book profits? Or would you say that probably the fundamentals are still gearing up to make investments right now?
So we have been very positive on Indigo post this correction in oil prices. And secondly, Indigo has one of the highest market share in terms of aviation when we want to play an India story. And now with most of the travel happening through the through this airline route, Indigo is the best place to be in. So we are not yet suggesting what is a profit booking in Interglobe.
So that's with regards to where Interglobe Aviation goes. That stock is at the day's highest levels. But thank you, Nandesh, so much for joining in. It's always a pleasure to speak to you as well. But completely out of time, on this edition of Trending Stocks from Sharad, the team that put the show together, and myself, lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts.
Instamart is seeing another round of senior level exits. Sources have told NDTV Profit that Chief Operating Officer Ankit Jain and Chief Business Officer Hari Kumar have resigned from the quick commerce platform, adding to a series of leadership departures since the company listing. Brent crude has wiped out all its wartime gains, falling below pre-conflict levels as tanker flows through the Strait of Hormuz normalize and progress in US-Iran peace talks eases supply concern. In an NDTV Profit exclusive, Iranian oil minister is likely to hold talks with Indian officials today. India weighs return to crude imports, both nations to discuss cooperation in the oil and gas sector. Commerce Minister Piyush Goyal and US Trade Representative reviewed progress on the proposed interim trade deal, with talks focusing on market access, supply chain, digital trade, and deeper cooperation in emerging technologies. Tractor demand is holding up remarkably well despite concerns over a possible super El Nino. Data shows registrations have stayed strong through the first quarter and are already running ahead of last year's pace, underscoring rural resilience. Hello and welcome. You're watching Lunchtime Trades, the show that gets you a roundup of everything that's happening in the world of commodities, news and updates on the top buzzing at this hour. All that while you grab your lunch. And let's take a quick look as to how the markets are doing at the moment. The Nifty 50 right now is seeing gains of about 0.7%, slightly off from its day's high point. But 24,200 levels is what we are tracking on the Nifty 50. The topmost gainer on the Nifty right now is Interglobe Aviation. The stock is gaining over 4%, 4.8% almost now, followed by something like a Max Healthcare, Interglobe Aviation, Maruti Suzuki, I beg your pardon, Mahindra & Mahindra, Shriram Finance, ICICI Bank, as well as TCPL, Larsen & Toubro and Eicher Motors are some of the names that are doing fairly well. But, the change from last we spoke an hour ago, the advance decline ratio now has changed. There are more reds on the screen as compared to greens, and you have ONGC, Coal India, Hindalco, Titan, Tech Mahindra, Tata Steel, etc. that continue to be under pressure. The Bank Nifty has seen gains throughout the day, again off from its day's low point, mirroring the Nifty 50, but tracking the 58,500 levels. An uptick of 530 odd points is what we are seeing at the moment. Let's try to pull up the sectoral heat map to see as to what sectors are looking like at this hour. You have, of course, Nifty Auto leading the pack, almost 3% of gains as we speak. Realty, consumption and banks doing fairly well, but metal has now taken a knock of almost 1%, followed by oil and gas and media, which is also in the red. Your defense, IT, energy, pharma, etc. have also turned into the red since the past 1 hour. Let's also try to pull up the advance decline ratio. Because that will give you a perspective as to how the broader end of spectrum is looking like. And you've got around 1,000 odd advances versus that of 1,500 odd declines. So more now skewing towards the seller, and that gap unfortunately between the sellers and buyers is widening, and it's reflected in the mid cap 150 and the small cap 250, because the mid cap 150 is now at its day's low point almost flat, about 0.05% of gains, and the small cap 250 is in the red at its day's low point, down by about 0.2 odd percent. So that's with regards to where the market go. Quickly, let's also pull up the BSE 500 before we go on to our guests. And specific names that have been buzzing still continue to gain. There's Relaxo, which is gaining over 14%. You have something like a Motherson Wiring, which is also gaining quite a bit. HFCL, Sterlite Tech are some of the names doing fairly well. But on the flip side, you have TCI Express, CSB Bank, Rajesh Exports that continue to be under pressure. So that's with regards to where the markets go. But let's get in our commodity guest for the day. Ajay Kedia, Director of Kedia Advisory, is joining us now. Ajay, thank you so much for taking out the time. Mahima this side. My first question to you is with regards to how are you viewing commodities as a whole? We just spoke about how crude now is back to the levels, as to where it was before the war started. What is it that you're picking up right now in terms of crude prices as they go?
Very good afternoon, Mahima. Yeah, crude is going to be more important because when the war has started, we have seen Brent making a high of 119 and almost now it's 40% down from the high, which is a very relief sign for everything, including the inflation. So I think we were not expecting Brent to be around 72. We were expecting if suppose de-escalation comes down, Brent should be around 80, 82 as a base as of now. No doubt in Q4, we should expect prices moving towards $65. But all of a sudden, this fall will give a relief. And that is why we have seen on domestic market, MCX, crude has been down around trading at 6,600. So first of all, the ceasefire news. Secondly, whatever the supply that has been totally trapped in the Strait of Hormuz has totally opened, and because of that, we have seen this fall. But maybe after 1 week period, we can see some consolidation between 75 to $80 could be there, because whatever the SPR holdings reserves are been there, that could be again start refilling and demand would be reimpaired. But here, because of ceasefire, ample supply from Venezuela is been in pipeline, from Russia is in pipeline. In coming days, we may see prices moving back to the level of $65, what we have seen last year in the month of October, November.
Okay, all right, sir. Okay, so that's the view with regards to where crude goes. What about gold, Ajay? Because, from its high, it's corrected quite a bit. Almost a 30% of correction is what we've seen from its highs. What is the read-through here? Do you think it's found its bottom? Do you think there could be further downside? How should one look at?
So whenever there is a war-like situation, generally we hear gold, silver should go up. But this time we have seen, not particular this time, in 2008, 2022, also the same scenario has been seen. We have seen the liquidation in other asset classes created pressure on gold and silver. But after the ceasefire announcement, we have seen a temporary bounce. But now things are being totally changed for gold and silver. First of all, dollar index. Dollar index was trading very well below 100 level mark, but now it's on 13 months high, which has created pressure on gold and silver. Second would be the Fed meet. In recent Fed meet, it has been confirmed that there will be a rate hike possibility in the month of December. And recently there was a report suggesting that September, October and December can see 0.25 rate hike in interest rate. And because of this sell-off has been continue to be there. One more thing is the selling pressure from ETF. So all this make gold and silver slightly vulnerable from current level. Maybe we may see some consolidation or some slowdown after breaching 4,000 level mark. Maybe 3850 could be immediate support, but it will take time to recover from here, because 2 years back we were expecting a rate cut, but now it's a rate hike scenario. But one caveat over here is crude oil prices. As sharp fall in crude oil prices has been seen, maybe in next 1 month period, if suppose inflation start cooling off, then it may possible that again the rate pause scenario will come. But as of now, gold, silver will be under pressure.
Okay. What about copper, Ajay? Because we've seen a significant run-up. We've seen volatility in this counter as well, considering that, we've been talking about the rising demand of data centers, AI, EV, energy transition, etc. And that could, possibly boost the prices going forward as well. So how are you looking at this commodity from at least a year's point of view? And if somebody is probably looking at trading copper, how should they look at?
So one thing is very much clear. Base metal were totally in limelight from last year onwards, when Donald Trump has added a tariff on copper as a critical metal we have seen. Secondly, the supplies has been totally intact. Third would be, we can say in the month of May, there was a sulfuric acid concern, and because of that prices has gained very well. Now prices has corrected on the two part. First, dollar index has recovered to the level of 100 and 150. Second, a profit booking, or we can say the sell-off what we have seen in gold and silver has corrected. Traders has taken profit, or we can say selling pressure out there. But yes, you have rightly pointed out that demand for copper is going to be a very wild, because now as geopolitical tension pulls off, then definitely the demand from economies would start picking up. I think the level for July contract, which is trading at 1250, is a very good level to take a long position. No doubt, in last 3-4 sessions, whatever the sell-off we have seen, some concerns still prevail in the market. But fundamentally, I think copper, zinc, aluminum, we have seen 9% aluminum global supply was totally disturbed because of this Strait of Hormuz. But now it has reopened and prices has moved down from the level of the 397 to 325. So I think a correction what we was required has been done. I would prefer to take a long position in copper around 1250 with a stop loss of 1210, targeting 1300 in next 1 month period. Zinc also looks quite good because whatever the we can say inventory was been there was a surplus that has been came down. So I think 350 is good level to buy, targeting 365, 370 once again. And last would be the aluminium, where we have seen a sound correction. But now things on charts looks very attractive around 328, 327. Again, we can expect a pullback, but that will take slightly time. So make a view of next 15-20 days. I think prices should come up again.
Okay, Ajay, what about agri commodities? Because we've talked about this, right? There is below normal monsoon is what we're expecting this year. There's El Nino, which could have an impact on a lot of these names, right? Especially the first half is where these counters could get impacted. So if you were to play agri commodities in the first half and the second half of FY27, how would that be?
So I think when we talk about commodity super cycle, generally it is start from energy, then goes to bullion, then base metal, and last would be the agri commodity. And that is why we have seen many agri commodity that has started moving. Take an example of spices, where dhania prices has doubled in last one year period. Still the fundamentals remain very much bullish. On and above all these factors, El Nino, or we can say Super El Nino, is going to be more important because it will be impacting our Kharif and Rabi, both the crop also. So there are certain pockets where still the value has been not unlocked. Like take example of Gawar seed, Gawar gum. Balance sheets are totally tight, and we have already seen the export numbers are quite good as US is increasing their production of crude oil prices. We expect next 1.5 months is going to be very crucial for Gawar on the prospect of monsoon, also on the prospect of demand also. So here around 5,900, one should take long position in Gawar seed. A break of 6,200 can give a new target of almost 7,000 on the higher side. Even Gawar gum, because churi korma demand from cattle feed are quite good. That can track the prices to the level of 12,500, 30,000. Spices, still we are bullish, looking to the balance sheet for dhania. We expect prices can realign around 14,000 will be a good level to buy, targeting at least 15,500 in next 15-20 days. Even turmeric, because sowing has been started, and this year the sowing area is going to be on a higher side. But looking to the monsoon concern, again the yield would be impacting, and that could trigger the buying, and prices may go to the level of 18,000. Last would be castor, which is trading at 7,000 level mark. I think demand is slowly and steadily improving. That could also give a better picture. But in all, one more thing is since Feb Ramjan demand, March, April, May, these 3 months, Strait of Hormuz has created the havoc in agriculture export. Now, as ceasefire has been done, we expect the export demand for agriculture commodity is going to be on a higher side. And as we are having a very niche commodity, which will be getting help. So overall, I am bullish on commodities like jeera, dhania, haldi, gawar seed, gawar gum, and castor.
Okay, all right, Ajay, thank you so much for taking out the time and giving us your all-round perspective on all the commodities that we discussed. But shifting focus to some names that have been buzzing in trade today. A lot of these counters are buzzing either on the back of news flow or volumes, and we have Shivam joining by to give us more perspective on what are these names and why are they buzzing. Shivam?
First stock in our list is Infosys, which has partnered with Centara to scale enterprise AI in healthcare segment. And with this partnership, the focus will be on improving the efficiency in IT, hospital operations, and the clinical support. Also, this will leverage the Infosys Topaz with the AI-driven transformation framework, and with an aim to embed the AI in healthcare management workflows and digital front office. Also, with this partnership, it is expected that this will enhance the patient experience and staff productivity. Second stock is Deccan Gold Mine, which has announced the launch of Jonagiri Gold Project in Andhra Pradesh, which has a capacity of 1,000 tons per day. And with this marks a transition from exploration to commercial production stage. And this gold mine has currently has a processing capacity of 1,000 tons per day, of about which 400 to 600 kilogram of gold is being produced annually, and this is being the plan to expand it to 2,500 tons per day with an output of around 1 ton per year. Also, this has been seen as a key step towards boosting the gold production domestically and reducing our dependence on gold imports. Third stock is the Apar Industries and Shanti Gold, as the board meetings for both the companies has been set for June 30 to consider fundraising via route of equity and debt.
Okay, Shivam, thank you so much for getting us those details on the number of counters that you mentioned. But Tata Motors management interacted with the media post their investor day to share insights on the roadmap to scale the commercial vehicle market share and sustainable growth. Let's listen in to what Girish Wagh, MD and CEO of Tata Motors, had to say to our colleague Puneet Zaveri on their FY28 guidance.
Largely continuing, because you've given a 40% kind of a market share, and something that you've spoken about in the past as well. You ended at almost 35, 36 or, and I think you mentioned the slide that you're at 37. But just in terms of that growth, do you think it's a little aggressive going into 2028, given some of the factors you spoke about, a very high base for H2 as well? And how are you seeing competition? Because in certain segments like ILCV, you've seen some market share decline also because competition has increased. So you had new launches. You mentioned that at the start of the year, but so has had the competition. So what gives you that confidence of that high growth for the next 2 years to get to that 40% target?
Yeah, so see, two things. One is, you said aggressive target. Yes, because, one has to set aggressive targets in the organization, right? That is number one. Number two, what gives us confidence? I think we, and I also mentioned it on the investor day, it appears many of you were logged in probably. I didn't know, Swaraj, you followed the whole Q&A also. But I think, see, our focus is on now clear pricing discipline, clear customer value creation, and whatever pipeline we have in terms of products and turnaround, if I may say, that we have done on the service delivery using Heritage. I think we are in a good position, and we must therefore leverage these capabilities into finally market share. Let me, however, clarify that now this market share come at the cost of pricing discipline, etc., not at the cost of the financial fitness. That will remain given, right? Over and above that, we have set aggressive market share targets with a perspective of customer value creation through better products and better service.
Just a supplementary in that, because you've also spoken about, apart from the sales, the whole network to help you get to that as well. And you also spoke about electric vehicles, CNG also to help you drive. So are you currently already seeing that incremental growth coming from these EV side of things as well? And is that visible in the higher tonnage MHCV side also? Is it a little early and will be more back-ended probably in 2028 where you see that growth coming?
Very good question. I think, see, if you look at alternate fuels within the larger this thing, and take, for example, small commercial vehicles, our share in electric and CNG, for example, is higher than that of diesel. Anyway, and therefore this movement towards electrification, CNG, will be beneficial for us, helpful for us. And I think probably our investment ahead of time in the new products, etc., is also helping. I think your read is also perfect on heavier truck side, whether electrification and numbers will be more back-ended. Yes, it will be. And let me also add, the penetration in percentage in heavy, medium commercial electric vehicles will be much lower than that of small commercial vehicles, but it will still be meaningful. Because why I'm saying it will be meaningful is because there are quite a few end-use sectors who are getting into it. And suppose, say, take e-commerce, you take mining, you take steel, cement, these are big consumers of commercial vehicles. And if a lead customer is able to see value and we create that value proposition with that customer, others will follow. And therefore, I see that high salience end-use sectors getting into electrification, it may be 1 or 2 or 3 customers, but is quite significant because once they prove it, others will follow. So in terms of overall numbers, it will be low, but actually it is quite meaningful. And buses, of course, all of you know what's happening in buses.
All right, so you heard the management of Tata Motors CV with regards to where FY28 numbers go. But the other aspect is with regards to quick commerce. We've seen in the past couple of days that Amazon Now and Flipkart Minutes have gone ahead and rapidly are scaling up and have been vocal about it, right? For example, Amazon Now has said that they want to get to 100 cities and 1,000 dark stores as soon as possible. They will have the widest selection and the fastest delivery speed in near future. The business is growing 25% month on month, and they've announced a 2,800 crore investment to expand. Plus, going forward in the next 5 years, $35 billion is what Amazon is planning to invest in India, and they want to penetrate majorly tier 2 and tier 3 cities. Now, the other aspect is with regards to Flipkart. They have scaled their quick commerce dark stores to over 1,000 stores. Flipkart Minutes orders have grown 5 times from previous year and is now present in 130 plus cities. Tier 2, tier 3 cities is what is driving the growth for them as well. Now, can this be a threat to something like a Zepto, a Blinkit or an Instamart? Well, most of these players are targeting the same consumers in tier 1 and tier 2 cities. So that could be that could mean that market share for all of these players could probably shift. It could go away from these early players and go to Amazon or something like a Flipkart. They're also leveraging discount, both Amazon Now as well as Flipkart Minutes, and that means a lot of cash burn happens for them. That is one of the means of customer acquisition, and that could probably give them some market share from these already established players. Both challengers are explicitly, targeting the tier 2, tier 3 and tier 4 cities where there is less presence of Blinkit, Zepto as well as Instamart. So that's where the real game for Amazon and Flipkart stands. Plus, the assortment with them is much wider and larger as compared to something like a Zepto or Blinkit. Now, where the threat is limited, dark stores, because Blinkit has scaled it to over 2,200. Amazon anywhere between 350 to 450 dark stores, whereas Flipkart Minutes over 1,000 odd dark stores. The cost flow problem, because quick commerce cost structure has a hard stop at 98 to 100 rupees per cost order, and if Amazon and Flipkart is using higher discount, cash flow or cash burn is going to be higher for them. The density game that Zepto has been playing is something that they've done it very smartly, because Zepto has made a deliberate choice to go deep rather than wide. So 21 stores per city, more than 2 times of that of Blinkit as well as something like an Instamart. So density directly means that there could be a faster delivery as well as lower cost per order for them. Lastly, in terms of the cash balance that they sit on, Eternal sits on over 17,800 odd crore of cash, and Swiggy at around 15,900 odd crore. Zepto, of course, not so much, but both of them have enough cash, that is Blinkit and Instamart, to sustain themselves for the next 3 years. But with the way Amazon and Flipkart have been burning cash, that's something that we'll be watching out for. So that's the whole story with regards to where the quick commerce competition heat goes. But the other one that we're putting spotlight on is SBI, which is the top gainer, in fact, on the bank Nifty. It's in focus as CLSA has maintained its outperform stance on the bank's loan growth and credit demand, which remains positive, and focus remains on NIM target. We have Sharad joining us to give us more details on what this note talks about. Sharad?
After a really long time, we are seeing our broking houses turning positive on SBI. Of course, the stock itself was technically in a consolidation mode, but CLSA has come out with its report and they have maintained an outperform rating. The target price set at 1,275 rupees per share. Now, they have stated that the loan growth is healthy and it's focusing on achieving the NIMS target. Overall, the credit demand is healthy, and the RBI's clarification, which had come on the FCNR bond, that's expected to aid inflows. That means for the last 2 trading sessions, we are seeing a good volumes also coming in the PSU banks. The 3% NIM guidance for FY27 is intact, and focus is on cost optimization going ahead. Asset quality is strong as ever, although there is El Nino risk at play as well. But nevertheless, after a really long time, foreign broking houses are turning bullish on SBI.
Right, and that bullish stance is kind of reflecting in the counter as well. So that's with regards to where SBI goes. But with that, viewers, completely out of time on this edition, but do stay tuned for more news and updates on the other side.
India Inc.'s most respected names.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I'm looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me Soumit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. So let's see what's on the show today. Firstly, we'll be speaking with the management of Roselle, Texas. Now, What could be the growth drivers here for the company is something that we'll try to decode with the management. How much growth is something that we're expecting from the new engines. Semiconductor space, what kind of growth can we see over the next 3 to 4 years? And commercial aerospace, how is that going to be a game changer for the company? Something that we'll try to decode with the management on the show today. Apart from that, we'll be also speaking with the management of GHV Infra. Now, recently they received an order of around 213 crore. But what are the dynamics of this order? How could the margins be? Is something that we'll try to understand from the management on the show today. And lastly, we'll be speaking about a stock called Bazaar Style. Now, this stock has been hitting a lower circuit for the 4th consecutive session. It has been down almost 19 to 20% in trade. What could be the potential reason behind this lower circuit that we have been seeing when it comes to Bazaar Style is something that we'll try to decode with our fundamental guest on the show today. That's the small cap buzzers. Now, if you look at the market, the Nifty second day of gains, that is something we are looking at. 24,200 is acting as a resistance, but a solid 160 odd points up in trade is something that we are seeing today when it comes to the benchmark index. If you look at the sectoral indices here, among the top gainers, we have the auto and the consumption names which have been gaining. In fact, auto index is up nearly 3% and this could largely be on the back of the Vahan data, which is showing strong registrations in the month of June. On the losing side, we have the PSU names and metal yet again losing for the second consecutive day. We are seeing weakness in both these counters coming in. But when it comes to the small cap names, a good day of gains is something that we are looking at. But Varsha, which are the key stocks here that are buzzing in trade?
Well, actually, let me put up Ramco Industries because, this stock is up almost 20% in last 5 days. Today is buzzing on the back of volumes. Volumes are trading at 25x of its 30-day average. The stock is up almost 15% in trade. You have Gujarat Natural Resources also, buzzing. As Amit was saying, a good day for small cap, I would say. Volumes are trading at 16x of its 30-day average. Gujarat Natural Resources is also buzzing in trade. You have TV Today Network. Let's pull up that chart also. Strong volumes, well, at 4 times of its 30-day average. Stock is up almost 9% in trade. You have AB Infra, Mirza International also buzzing. Black Rose Industries 32% in last 5 days. Today also the stock is buzzing almost, if I'm not wrong, 6 to 7. There you go, 11% in trade. Black Rose Industries. On the loser side, you have TCI Express. Not much counters when it comes to loser side. TCI Express is down almost 12% in trade. But one stock, which is in focus is, of course, Rosell Texas. This company is actually venturing into a lot of new segments, I would say. You have semiconductor, you have, space. To speak more about that and what's outlook for the next 2 to 3 years, we are joined by Mr. Rishabh Gupta, who's Managing Director at Rosell Texas. Mr. Gupta, welcome at NDTV Profit. Pleasure to have you.
Hi, thank you for having me.
Pleasure is our sirs. I just wanted to understand the new business that you are entering. You mentioned 50% aero defense and 50% non-aero mix going forward. But how should one think about mix beyond FY27, considering your semiconductor and space segment scale up?
Yeah, so we're seeing a significant scale up in both semiconductors and space. We're looking at a 300 to 400% growth this financial year in the semiconductor and space technology side. And it should be pretty consistent that we would be doubling year on year for the next 3 to 5 years.
With that, so 300 to 400% of guidance for FY27, I agree that. But what's the base today, number one, and how large can these segments become in the next 2 years?
So last year we did approximately 10 million between the semiconductor and space technologies, which should be closer to 40 million this year. So for 400% growth, and that should continue for the next couple of years. So we're looking at least 100 to 200% growth year on year in both the semiconductor and space technology.
Particular counter on closing basis. If it closes below that, then we can see some further corrective move in this counter towards 4,950 odd levels. So I think 5,250 should be the trading stop loss for the rest of the 50% quantity.
And Samir, want to get your views also for Interglobe Aviation. I know the valuations are a bit expensive, and while we're discussing, Somit was mentioning there was a smile on your face also. Just wanted to understand, is there anything left, for a value investor for Interglobe Aviation?
So the smile on my face was when Deven said that you should book profit, because I'm not a big fan of being invested in the aviation industry. I've always stated that aviation industry, if you look at it worldwide, it is the industry that makes billionaires into millionaires, right? Now, coming to why I am not a very big fan of this industry is for the simple reason that, look, you're booking tickets and buying, taking money up front, but you don't know what your eventual cost of fuel is going to be, right? So like in the situation where fuel prices ran up, you had booked all these tickets at lower prices and suddenly you had to buy fuel at the higher prices, which made you lose money. And I think Q1 numbers for Indigo are going to be pathetic. Now, the reverse obviously benefits them on the other side. But the basic point is that if we see economic slowdown at any given point, travel is the first thing that takes a hit. And when that takes a hit and you are flying these planes which are going and not up to capacity, and you cut prices to bring more people on, it kind of hurts the industry. So for me, aviation is a high risk industry and I would not invest. Valuations obviously on the higher side, 37 times. Of course, but growth is something that people factor in Indian aviation. But I worry that it takes one major event to send something like this into a tailspin. So for me, aviation as a sector overall is an avoid.
That's right. But Hiral, a long weekend is also coming, and I think a lot of folks, our viewers, must have booked flights. Must be very expensive.
Must be expensive as well if they have booked in the short term, taking the war situation, easing out closer to the long weekend. But let's see, I think we'll check that and let the viewers know as well. But it's time of the day where we are doing and getting you all the chatter from the dealing room. Somit Sarkar is still with us to tell us what is he picking up just before the long weekend. Somit, is the chatter to actually book profits ahead of the long weekend or continue holding and give something new?
Well, there are actually no chatters of booking profit after a very long time that we are looking at, because during the war, always whenever there was a long weekend or weekend coming in, people used to be light and never used to carry forward their positions. But there's no such chatter as of now in the dealing room on that front. But a few stocks that dealers have highlighted. Firstly, it's Bandhan Bank. The stock is down on rumors of fundraise and a guidance cut that could come in. Today there's a board meet, but what dealing rooms are indicating here is that the fundraise would just be an enabling resolution and there won't be an actual fundraise that the company would go ahead. And they're also not expecting any guidance cut that would come in for Bandhan Bank. So keep an eye out for that counter. The stock is down nearly 4%. There could be a reversal going forward. For Vimta Labs, there are buy flows on the large HNI and PMS desks. They are expecting a potential M&A activity that could happen here in this counter. For Sterlite Tech, the company opened their QIP yesterday. The demand is seen to be quite strong for this QIP, and multiple mutual funds have shown interest with the likes of Nippon and Motilal is what dealing rooms have indicated. For Gina Seco, large prominent HNI has been accumulating this counter in trade today is what dealing rooms are indicating. And for Confidence Petroleum, there are buy flows on the large HNI desk. Dealing rooms are indicating that the first quarter numbers are expected to be bumper for this counter. And lastly, when it comes to Vishal Megamart, there are some sell flows on the PMS desk. Dealers expect a weak first quarter numbers, and there's also a buzz of a potential block deal that could happen when it comes to Vishal Megamart.
Okay, so interesting names coming in there as well. In fact, we should actually look at a technical check on any of the names. Deven, from all the stocks that Somit actually mentioned, where there is a little bit of chatter in the dealing room, anything on your cards as well?
Yes, definitely. I think I'd like to discuss two stocks out of that particular stocks. I think Bandhan Bank have respected its 50-day exponential moving average today, and it has shown some bounce back from these levels. So I think on the downside, 196 to 193, that is a strong support zone for this particular counter, and we do not see this counter moving below that levels. Whereas on the higher side, 215 to 218 is the resistance zone. I think this counter can trade for few days in this particular range, and any of the breakout on the either side will help the counter move at least 5 to 10% in coming days. So one should look at these particular levels. On the lower side, it is around 195. On the higher side, it is around 215, 218. The second stock which was discussed was Gina Seco. I think the stock is consolidating in the range on the lower band and it is trying to move higher, but there is a resistance on the higher side towards 630 levels. So if it crosses and holds above 630, then only we can see some further up move in this particular counter. Towards the next resistance of 740. So 630, an important resistance. If it breaches, one should try to buy this particular counter on this breakout for the target of 740 levels.
Interesting names coming in, but another sector, of course, is the top sectoral gainer. That's the auto pack. These stocks are gaining traction on the back of softer crude prices and resilient demand trends. Vahan data for June indicates sustained retail momentum across the segments despite geopolitical volatility and fuel price fluctuations. Let's go across to Puneet for more details. Puneet.
Well, thank you for that. It's definitely the one key aspect on the lower crude prices, which is definitely having a positive impact both on the truck makers as well as now across the board. So you've seen that momentum continue. When you also look at the June Vahan data till June of 2025, June 25th, 2026, you've seen that momentum continue as well compared to the same time last year, and much with rigor to add as well. When you look at the data, growth momentum also continues despite fuel price volatility, as well as the INCRED has put out a note where they have seen the dealers are using higher discount as one of the key strategies to continue the demand momentum from fading away at this point of time. OEMs have, despite having taken a 2 to 3%, 2 to 3 times price hike as well, of roughly between 1 to 4%, you've seen from January, demand has continued to remain resilient. So truck makers, growth has been slightly slower at this point of time, but because you're seeing divergent trends there. But EV momentum in both cars as well as two-wheelers is continuing as an additional booster. So when you look at the two-wheeler makers, what we have done now is compare the retail actual sales on a per day basis compared to the whole month of last year. So for Hero MotoCorp, the number that we're putting out is roughly 14,400 vehicles being sold every day, and this is retail sales. So it is the actual sales, a growth of 10% compared to the same time last year versus the per day average of 2025 June as well. For TVS Motors as well as Bajaj Auto, the growth is much higher, almost 20 to 37%. And for Eicher as well, the growth is almost 25% to almost 3,000 vehicles that are getting registered every day for Eicher Motors as well. When you look at the four-wheeler makers though, the growth is even stronger. So Maruti Suzuki has actually reported a 33% jump, 5,000 vehicles per day getting registered. You're also seeing a very high momentum for M&M as well, because it has both the higher end EV portfolio as well as within the Thar basket as well, that the mid-size SUV segment that's growing well. Hyundai, the growth is slower, but for Tata Motors also a 40% growth that we're seeing on a per day retail sales basis. The truck makers though, as I mentioned, while there has been strong growth for Tata Motors, there has been slower growth that's visible in Ashok Leyland. It'll be interesting to see if that trend persists or no. But for the tractor makers, yet again, you're seeing a 19 to 25% growth. The first 4 months are very crucial for the tractor sales for the full year as well. Almost 1,300 vehicles being registered. So that's the trend that's currently visible. A strong momentum across the board despite the volatility that we've seen across the board.
Okay, that's interesting data as well. And today, the entire sector, auto ancillaries, both of them buzzing in trade. To discuss more, we have Dhruv Joshi, research analyst at Mirae Asset Sharekhan, joining in. Dhruv, welcome to the show. Always a pleasure to speak to you. What are you making of this rally that we are seeing in terms of auto companies as well as auto ancillaries right now? And the kind of commentary that has come in has also been very strong. Vahan data also indicating good amount of strength. And this is just before a forecast where the monsoon, wherein we could see a deficit.
Yeah, hi. Thanks for having me. So it's been a great end to the week. I would say that crude prices have somehow corrected out back to their own levels that before the war started. This is definitely a positive for the entire sector. Hence, we see that rally more so for the CV players, wherein we saw a kind of slowdown in the months of April and May. So there, the trend for the heavy vehicles, the M&HCV segment kind of was a little slower, wherein LCVs kind of made up for most of the things. But overall, the domestic market remains resilient and averse to the macro shocks that the whole world was facing. The problem continues to be the slower monsoons that at the deficit that's planned by the IMD. We do see that going forward, if there is again a higher deficit compared to what is already forecast, that could somehow slow down the tractors' volumes, primarily based on the sowing and the harvest that would entail. Overall, if you look at the following picture, the first quarter of this year for the automakers should be in the negative, because what we saw was deep impact of higher raw material prices, which is kind of negated right now with all the trend that we see. But overall, domestic resilience continues to beat everything in the market right now.
Right, Dhruv, there is some chances of El Nino risk which was there, and that was, the street was estimating that, the demand might be impacted, but the story remains something else only right now. And now I just wanted to put that in perspective, which stocks in the medium term you could say are well poised, when it comes to the demand.
So coming to stock specific, we believe the PV maker, I'll come to the sector specific probably. On the PV makers, we prefer Maruti and as well as Mahindra and Mahindra. So those two stocks we believe are the kind of the highest beneficiaries of the overall demand trend that's been moving in. And Mahindra again on the higher EV portfolio, which is seeing solid, strong growth momentum. Coming to two-wheelers, we kind of like at the moment Hero MotoCorp, which is doing fairly well on the basis of its whole portfolio that it carries, exposed to overall rural demand. But with the kind of momentum it has seen in the export markets and the kind of moves that it's making, we believe that for the valuations it trades at is kind of a better pick. And again, on the M&H CV side, we prefer Tata Motors CV. That's kind of a given there where, CV makers have now moved ahead of the pack.
Okay, thank you so much, Dhruv, for that. Interesting names that we are picking up as well when you talk about the entire auto pack. In fact, my colleague did actually attend the roundtable with the Tata Motors CV management, and they had interesting things to talk about it as well. Let's quickly listen in to what the management had to tell Puneet.
Largely continuing, because you've given a 40% kind of a market share, and something that you've spoken about in the past as well. You ended at almost 35, 36 or, and I think you mentioned the slide that you're at 37. But just in terms of that growth, do you think it's a little aggressive going into 2028, given some of the factors you spoke about, a very high base for H2 as well? And how are you seeing competition? Because in certain segments like ILCV, you've seen some market share decline also because competition has increased. So you had new launches, you mentioned that at the start of the year, but so has had the competition. So what gives you that confidence of that high growth for the next 2 years to get to that 40% target?
Yeah, so see, two things. One is you said aggressive target. Yes, because, one has to set aggressive targets in the organization, right? That is number one. Number two, what gives us confidence? I think and I also mentioned it on the investor day, because many of you were logged in probably. I didn't know, Swaraj, you followed the whole Q&A also. But I think, our focus is on now clear pricing discipline, clear customer value creation, and whatever pipeline we have in terms of products and turnaround, if I may say, that we have done on the service delivery using Heatedge. I think we are in a good position, and we must therefore leverage these capabilities into finally market share. Let me, however, clarify that none of these market share come at the cost of pricing discipline, etc., not at the cost of the financial fitness. That will remain given, right? Over and above that, we have set aggressive market share targets with a perspective of customer value creation through better products and better service.
Okay, so that's the word coming in from the management of Tata Motors. Deven, anything that you like on the charts? Would you say it's, booking profits right now, or are you seeing further momentum? Could it be, auto or from the auto ancillary space?
No, I was just going through many of the auto stocks, and more or less all the auto counters are approaching their resistance level. If we consider Maruti Suzuki, we have resistance in place around 13,900, and we have seen some kind of a cool off from that levels. So yes, for Maruti, one should try to book profit. Even if we consider two-wheeler pack, I think TVS Motors is also approaching its resistance level. We have seen a falling supply trend line on this particular counter around 3,600 to 3,615 levels, and we have seen slight profit booking from that level. So as far as the auto packs are concerned, I think one should try to book certain profits. Even M&M, we can see a resistance on the higher side. It has still some room to move towards 30 to 50, but if it approaches that level, again one should try to book profit in M&M as well. So overall, as far as auto packs are concerned, one should try to book some profits in this particular counters. Whereas auto ancillary stocks are concerned, I think they are looking good, especially Motherson. I think one should try to hold Motherson, Samvardhana Motherson, with trailing stop loss, those who have already purchased. If any particular dip around 149 can be a good entry point for some further up move. I can see some further up move coming in Motherson towards the target of 161. So one should try to accumulate it on dip towards 149. The stop loss can be around 141 for the target of 161. So auto ancillary looks good, whereas the auto packs can see.
So thanks a lot, Deven and Samir, for taking out your time and giving you both fundamental and technical views. It's always a pleasure to have you with us, gentlemen. But moving on, Gautam Adani has launched Vande Bharatam, a nationwide hunt for innovators and entrepreneurs across all states and 800 plus districts. 75 finalists will be shortlisted through a multi-stage process and invited to Ahmedabad for an immersive program leading to a grand finale around Independence Day. The initiative aims to uncover entrepreneurial talent beyond traditional startup hubs across regions and communities. So a lot of action is there on the other side of the break. Stay tuned to India Market Close.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup you're truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I'm looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to NDTV Profit. You're watching India Market Close. Now, clearly, let's just pull up Nifty 50 as well. We've slipped at the day's lowest levels. We're below that 24,100 mark is what we are looking at, 24,055 in trade, and the pressure building up as well. But overall, if you have to look at in terms of what's happening in the markets and what should one do, Dhananjay Sinha, CEO and co-head of institutional equities at Systematic Group, joins in. Mr. Sinha, good afternoon and welcome to the show. Always a pleasure to speak to you. My question coming to you is, in this kind of a market, how are you looking at investments? Would you say this is the time to probably book profits where you're seeing that kind of surge, or is it more of a buy on dips market?
So I think if you look at the markets post the war, I think there was some recovery and all. But I think it's kind of a fairly sideways market, and I don't think the market sentiment has any directional, setup at this juncture. So I would say that people are sort of looking at sector rotation and bottom-up approach. I think the mid-cap space has actually rebounded more strongly than the headline Nifty or benchmark indices. So I think people are looking at specific sectors and stocks. I would say I think from a fundamental standpoint, at the current levels, people are looking at what the earnings trajectory would be for the coming quarter. So the result season is likely to start again. So I think people are looking for what the management guidance will be. I think broadly with the management discussions that we've had recently in our conference, where we had sort of invited almost like 30 founders and CEOs, essentially people are cautious about the near term, whereas they're kind of guiding for a high double-digit growth kind of a scenario. That's a hope, but we'll need to see how the results pan out. I think investors are generally cautious from a earnings guidance standpoint. So I think that's an important thing. I would say from a positive standpoint, the market is also looking at the fact that crude oil prices have come down after the whole hope that has built up after this ceasefire that's there between US and Iran. I think that's one thing that is on the positive side. And secondly, the market would also be looking at what kind of fund flows would happen through the RBI announced to shore up for reserves. So I think these are the couple of things that people are looking at. But my own is that irrespective of these developments, the market is kind of
And that
consensus
exactly
on
right,
selling.
Dhananjay. That's an interesting take coming in. But joining us, we are having Amardev Singh, Senior Vice President of Research at Angel One. Good afternoon, Amar. It's always a pleasure to have you with us. But looking at the markets, a profit booking kind of coming, just ahead of the long weekend. Let's just pull out both Nifty Bank. What are the key levels to watch out for both of these indices, Amar?
Yeah, thank you for having me. So basically, if you look at Nifty has been struggling to sustain over the 24,000 levels, which is, however, it's managing today to sustain. But I would say that Nifty, for any meaningful upside rally, it needs to sustain above the 24,200, 24,400 zone. That's a very critical and important zone. However, one positive which I see in Nifty is that some of the indicators from an intermediate term perspective have turned positive after almost 20-25 weeks. So that effectively tells me is that if Nifty is able to sustain the 24,200, 400 zone, which is very critical, then we could see a further rebound in Nifty towards 24,800 odd levels. Otherwise, we could witness some consolidation. Yes, on the downside, Nifty is very strongly protected on the lower side towards the 23,700, 800 zones. This is zone of 500, 600 points, which is very critical for Nifty in the short term. And if I look at Bank Nifty, however, has been outperforming because we've seen that in some of the private banks as well. And Bank Nifty is stronger poised to stay strong. And I would say that on the upside, Bank Nifty could meet with resistance on the upside towards 59,500, 60,000. So there is scope of 1,500 points of rally in Bank Nifty going forward as well. Whereas on the downside, it is very strongly supported somewhere around the 57,000 odd levels.
So these are the important levels to track. But going ahead, Amazon CEO Andy Jassy met PM Narendra Modi today to discuss what's ahead for Amazon in India. Listen in to what he had to say post the meeting.
Prime Minister's vision over the last 12 years is just remarkable. And you can see it in the development of the country and how important the country is in almost every aspect around the world. And when I have the good fortune to spend time with him, he has so many ideas for how to continue to make the country better on every dimension that it's very noteworthy, it's very remarkable, and it's impressive. We've invested $40 billion in India since the year 2010. And then at the end of last year, we announced that we were going to invest another $35 billion in India between 2026 and 2030. And we just announced today that we're going to increase that amount from $35 billion to an incremental $48 billion of investment between 2026 and 2030. And a fair amount of our investment is in our marketplace business, but the incremental $13 billion we announced today is focused on cloud and AI. India is becoming such a significant cloud and AI hub around the world, and we have so much demand here that we're continuing to invest in the country on the cloud side and the AI side as well. We've accounted for roughly 2.8 million direct and indirect jobs in the country, as of 2024, and we're hoping to make that number more like 3.8 million by the end of 2030.
That's interesting to see what Amazon is actually looking at in terms of where Indian markets go. Increasing investment, Sharad, is absolutely interesting. But what happens with Amazon now versus competition is the key.
And it's a very big thing. There was a negative reaction also last trading session.
Absolutely. In fact, let's actually head across to my colleague, Mahima, who's actually comparing this for us with regards to what happens if you have to compare incumbents like Blinkit, Zepto, Instamart, and all of them are pretty much deeper right now in terms of their dark store networks, and the supply density is also stronger. Over to you, Mahima, to take us through this quick commerce battle.
Right, so, it's both sides of the game, right? There is competition increasing, but there are some areas where there is still advantage that Blinkit, Instamart, etc. have. So I'll, take you through one by one each. Now, if you take a look at how Amazon Now and Flipkart Minutes has been scaling up. Amazon Now has said that they want to get to 100 cities and 1,000 dark stores in the near-term future. They will have the widest selection and fastest delivery speed in near future. The business is growing 25% month-on-month basis, and they've also announced investment of around 2,800 crore to expand. They want to, pierce into the tier 2, tier 3 cities, and they're going to invest around $35 billion in the next 5 years in India. Flipkart Minutes has also said that the quick commerce has scaled to 1,000 dark stores since the launch in 2024. Flipkart Minutes order has grown 5x from previous year, and quick commerce is now 130 plus cities. They are also targeting the tier 2, tier 3 cities. Now the threat assessment. Now, can this hurt market shares or top line and profits for something like a Zepto, Blinkit or Instamart? Now, what is happening is that most of these players are targeting the same consumer base, at least in tier 1 and tier 2 cities. So that's where the real competition is, and that's where market shares could be lost. The second fact is that Amazon Now and Flipkart Minutes are playing the discount game. They're giving the highest possible discounts amongst all of these players, and they're burning cash on the back of that. And this is for the customer acquisition that they're doing. Both challenges are explicitly targeting smaller cities. So both challengers, that is Amazon Now and Flipkart Minutes, are doing that, smaller cities, and what they're doing is they're targeting tier 2, tier 3 and tier 4 cities where they can go ahead and expand, where there is lesser presence for something like a Blinkit or Zepto. Now, where the threat is limited, one, dark stores, because Flipkart Minutes is around 1,000 stores, Amazon anywhere between 350 to 40 to 450 or dark stores, Blinkit as high as over 2,200 dark stores, right? Plus the cost flow problem. So quick commerce cost structure is, the hard floor is of around 98 to 100 rupees per order right now. So if Amazon and Flipkart is using higher discounts, that means higher cash burn for them. So that is going to be one problem where, they could see cash burn, and that could be an area where it is difficult for them to compete, but at the same time they've got a wider range of assortment that could benefit them. For Zepto, the density game is much an interesting aspect to look at, because Zepto has made deliberate choice to go deep rather than wide. So they have around 21 stores per city, more than 2 times the 9 stores per city for both Blinkit and Instamart, and this density directly translates into faster delivery and promises and lower cost per order. So that's where Zepto has its advantage, which we'd have to see as to how Amazon and Flipkart could compete to. And lastly, in terms of Blinkit and Instamart, they've sustained their runway. So Eternal is sitting on cash of around 17,800 odd crore, Swiggy around 15,900 odd crore, but Zepto not so much. And both the way Amazon Now and Flipkart Minutes have been burning cash, it could be difficult for them to sustain those cash levels. So that's something that we'll have to watch out for. Enough, of course, for Blinkit and Instamart, it's enough cash flow for them to sustain for the next 3 odd years. So that's something that we'll have to wait and watch out for to see as to how that takes place. So this is the overall view of how competition has been panning out in quick commerce space.
Thanks a lot, Mahima, for that interesting analysis. But coming back to the markets, Amardev, I just wanted to ask, your technical picks, or let's say the BTST picks, we are at that time of the day now, what would it be?
So the first stock to look at is Ashok Leyland. So if we look at Ashok Leyland, clearly it is showing some signs of momentum built up. So this is one stock one can look at, buying at the current levels, that's around 160, because the stock has corrected significantly. It's in for some consolidation, and after consolidation, it's now inching up higher. So this is one stock one can look at, buying at the current levels with a stop loss of 147. And then upside target of 179.
Okay, so that's with regards to where Ashok Leyland goes as well. But moving on, your gold financiers are absolutely in focus. Your CSB Bank, you look at a Muthoot, Manappuram. Let's pull up all the 3 counters on the screens and see what's happening. Manappuram, though, is trying to get and recover in trade. Muthoot Finance is another one that you should be watching out for, along with the CSB. Muthoot almost at the day's lowest levels, and a CSB likewise. Let's pull up a 5-day chart as well of all the 3 counters, because that will also tell you with gold prices receding, you are seeing that impact come in over there. From highs, You've seen that downtick that has come in on a Manappuram as well, absolutely flat in the last 1 week. 5% downtick coming in for a Muthoot. In fact, lenders in India are registering a sharp growth in gold loan portfolio. That's what the business is looking like, and this was only because of the 65 to 80% rise in the precious metal prices. Now, they are looking to grow the share of secured retail asset book as well. Piyush joins us with more details. Piyush, good afternoon. This is an interesting story. You know, we've picked up this at a time where now your gold prices have started to come off. So the question is, with everything that you've picked up so far on this entire segment, what happens next as well? Over to you.
Right. So there was this very interesting report by Experian India. It showed that around 45% of the incremental retail credit which is coming is just from gold loan segment. Gold loans now they are outpacing all other the sourcing wise banks. NBFCs are increasingly sourcing gold loans. Banks' portfolio, gold loan portfolio is up around 121% year on year to 4.88 lakh crore. Overall, the overall lenders gold loan portfolio is at around 19.4 lakh crore, which has more than doubled in the last 1 year alone. Around 5.09 crore gold loan applications were sourced in Q4 FY26 itself, which is higher than 3.7 crore a year ago. Essentially, you asked about what will drive the next phase of growth. We are aware now the pickup that we saw was essentially on back of higher gold prices, but now the next phase of growth will come because of the newer entrants, big NBFC entrants in the gold loan space. For example, L&T Finance has said it will open 400 new gold loan specific branches in the FY27. Bajaj Finance said it will grow its gold loan share in overall AUM to 5% from 3.5%. Now Piramal Finance is saying it will launch 180 gold loan branches alone in FY27. So yes, NBFCs are now gaining the market share from private banks. Public sector banks are expected to drive the next phase of growth in gold loans, and on average the ticket sizes are also increasing, and the RBI has come out with refined guidelines which suggest proper LTV ratios for different ticket sizes. So the newer entrants, the bigger entrants, the NBFCs will drive the next phase of growth. Back to you.
Okay, thank you so much for that. Dhananjay, any view that you have in terms of gold financiers? We're pretty much at the lag end of the show, so quick one on that.
So I think, gold prices are actually very important for the gold lending sector. So there has been a significant growth, almost like 100% growth in gold loan expansion by banks and NBFCs. But I think at this juncture, the momentum is flagging because the gold price is actually flattening as well. So I would say that best of the gold loan growth is behind, I would say. We need to look at it after a few months. Possibly the gold prices might accelerate furthermore once again. So we'll need to sort of look at it after some point of time. Yeah.
Okay, so that's with regards to gold finances. Amar, from the metal pack, which is seeing profit booking over the last couple of trading sessions, anything that you spot where you could see buying opportunities at lower levels, or are you seeing further downside momentum building up?
I would say that if I look at the metals, definitely we've seen some very sharp correction. If I look at Vedanta, for the month, it's down by almost 23%, but it's approaching very critical and crucial support zone. So there could be a respite from the sharp correction which we have witnessed in most of the metal stocks. And there could be some pullback, but the pullback is likely to be temporary, because what's happening here is that the structure has changed for most of these metal stocks. So clearly, one thing is very clear, that the tops have been made, and that's not going to be breached in a hurry. And on the downside, for example, Tata Steel is concerned somewhere around the 180 zone is a very crucial and important zone of support. It's currently around 188 levels. So there could be some pullback from those levels, but again, 200, 205 would be the zone of resistance. So most of the metal stocks are now going to get into the consolidation mode.
Okay, that's the interesting take coming in. And also Incred is turning on the cautious on aluminium, now expecting prices to correct towards $2,100 a ton. The brokerage believes China's growing scrap supply and a Middle East easing its risks could rewrite the metals bullish narrative. Parth is here with us with more details. Parth?
Right, Sharad. So InCred has maintained a sell rating on the aluminium sector, and they are expecting the aluminium price to correct up to $2,100 per ton. Now, the stock impact, if this happens, then they've said that in terms of NALCO, they have maintained a reduced rating, as the EV by EBITDA metric of the stock could rise from 5.3 times right now to 9 times if aluminium prices correct by this amount of $800 per ton. Then second one is Hindalco, where they have again given a reduced rating, as the EV by EBITDA might rise from 6.9 times currently to almost 10. And thirdly, in Vedanta Aluminium, they don't have a rating as of yet, but they also expect a similar trend here with EV by EBITDA rising from 5.4 times currently to 12.2 times, which is a massive valuation. Now, the reason why InCred is bearish right now is because they are seeing metals, especially aluminiums, are pricing in persistent deficits in their supply because of the disruptions that we saw in Middle East. But actually, that is not the case. The growing scrap availability in China can offset these supply shortages. Also, the risk premium that we saw due to those Middle East tensions is now starting to unwind because as the disruptions are easing in right now. To understand the scrap game even more, around 80% of all the aluminium products manufactured have the potential to recycle. This recycling consumes 95% lesser energy than producing newer aluminium products. And secondly, also the secondary aluminium is already 35% of the global supply. So China is right now importing a lot of scrap and then recycling it domestically to reuse that aluminium instead of importing the metal again and again. So the key things to watch going forward will be the China's import of scrap and also the Middle East tensions. If everything settles down, then InCred's view on aluminium can be proven right.
Thanks a lot, Parth, for that interesting analysis. Amar, just a quick view on the metals. Of course, we have been seeing that negative sentiment all across. Do you think more sell-off can happen? And if yes, out here any short positions can be made, or are you a value buyer here?
So if I look at the metal stocks, as I've said, we've seen some very sharp correction in those metal stocks. And we were talking about earlier about aluminium. So yeah, there has been a sharp sell-off there, but aluminium is approaching to very crucial support zone. So I would say that at the current levels, maybe or a slightly 2 to 5% lower, that's a buying opportunity rather than going short at the current levels.
Okay, I know metals pack is something that you're watching out for, but IT as a space is also very interesting. Dhananjay, any view when you look at IT as a sector, because there is pressure. However, valuations are cheap and you have Oracle Financial Services, which has been bucking the trend in terms of the overall sector.
So I think by and large, there has been an overhang in the on the sector for quite some time. I think over the last 5 years, it's been a major underperformer. In the context of what is happening globally with respect to AI stocks, and there is certain amount of jitteriness as far as the AI stocks is concerned. We have seen that in the US and other places as well. So I think any dislocations out there can have a ramification for the IT sector in terms of their sentiment. I think notwithstanding the fact that these stocks are cheap from a historical standpoint, I think there is still a downside risk given the global context that is evolving.
All right. Thank you for that. In fact, Jasmeet, you've actually analyzed Oracle Financial Services as well as to why that stock has been bucking the trend. What are you picking up in terms of your analysis?
Well, Hiral, thank you for that. As rightly said, Oracle is a company which is going against the tide. It's swimming across the tide. If you look at the overall IT pack, which is tanking in trade, but Oracle is a company that has been gaining considerably. Like over the last year, IT has lost nearly 30-odd%, but over the last year itself, Oracle is up nearly 15-odd%. And over the last 3 months, Oracle has really rallied a lot. It's about 58-odd% in trade. Well, here are the top 5 key reasons why we are seeing Oracle running in gaining in it compared to the IT company. Well, the first one is Oracle is a product-led business, unlike other IT service companies. So majority of the revenue, like nearly 90-odd% comes from the product business for Oracle. And further, if you look at the margins, the company does have huge margins at nearly 49% when compared to IT pack, which is nearly 10 to 12%. While the second reason is the overall business which they do. They have a lot of repeat business where the clients don't generally change the end supplier. But unlike IT companies where they have to win the order, that becomes a key concern to watch out for, though the ramp up becomes a little slower. But look at the third reason, the overall core banking is a platform for the company which has a lot of AI embedded in them, which is a key positive given that a lot of banks don't generally change the banking software given the formalities, and also Oracle as a company has a big ecosystem. So Oracle Financial Service just fits right in the entire ecosystem. When you look at the last one, the company does have a record order book of nearly 7,000 odd crore, which is giving a huge visibility going ahead. Now we have a quick comparison between IT companies, Oracle companies, how they're different and how well they're doing in trade. Well, if you look at the business model, as I already mentioned, it's a product-led business for something like an Oracle, but IT companies run a service and consulting-based system. We look at the revenue model. Oracle earns majority of the revenue from licensing and maintenance, which is a repeat revenue, which is a key positive. But unlike for IT companies, they will have to win projects for every time the projects get delayed, or they'll have to win the projects. That's the second one. Well, the third one is the revenue visibility. While the company has high recurring revenues, and visibility becomes way clearer compared to IT companies. While the AI impact, well, Indian IT companies are still catching up with the AI to apply to their services. But Oracle has the AI embedded in the software itself, so which is a key positive for the company. We look at the other key aspect in terms of the manpower. In case they want to scale up the products, is there a software which they are selling, so they need not hire more employees to scale up. They can just increase their sales. But on the other hand, IT services, to increase their revenue, will have to hire more employees, which will end up impacting the margins eventually. We look at the other key aspect, the scalability, as we spoke about, and lastly the operating margins, which are higher for 49% Oracle, but for IT companies between 10 to 15%. So these are the key reasons why Oracle is buzzing in trade compared to other IT pack.
All right. Thank you so much, Jasmeet, for that. This is a very interesting one to watch out for. But thank you, gentlemen, for joining in. I think we'll thank all our technical and fundamental guests as well on the show, because towards the last 2 minutes, you're seeing a closure. Markets almost given up all the gains. We are at the day's lowest levels as we speak. 24,052 is what you're tracking. Let's just pull up the intraday chart to look at Nifty 50, and then we'll look at Bank Nifty as well. There you go. Almost at the day's lowest level, 24,050. I think 30 points above is what you're looking at. You've given up those gains from the highest levels. Let's pull up Bank Nifty on the screens as well and see what's happening with Bank Nifty. A very similar chart is what you're seeing in terms of Bank Nifty as well. In terms of Nifty 50 contributors, that is going to be interesting to understand which are the names that has pulled the markets lower. There you go. Bharti Airtel, and this is coming in spite the S&P upgrade that we saw on a Bharti Airtel. Infosys is another one from the IT pack, Hindalco. These are the ones which are contributing. However, if you have to look at gainers, it's mainly your ICICI Bank from the banking space, M&M, Maruti contributing to the kind of gains, and Indigo. That's keeping it evens and Stevens in today's session. Let's look at the heat map in terms of Nifty 50, and then we'll look at the advanced decline ratio as well as to how that has contributed so far. In terms of the heat map, you have in fact the ones which were losing out, that list has widened a little more as compared to where we started off India market close. But Indigo continues to rule. You have a M&M Maruti which is up in trade. You have Max Healthcare from the Pharma pack, which has continued to stay in the positive. Few of the consumption names, Tata Consumer, Nestle has climbed up as well. Dr. Reddy, Shriram Finance, Bajaj Auto and SBI is what is looking good. But ONGC, Hindalco, these were there. You have Tech Mahindra from the IT space, Infosys, which has led the markets lower as well with their overall contribution. Let's look at the sectoral heat map, and then we'll look at the broader markets in terms of closure. Sectorally as well, auto again continues to be the top winner along with consumption, but that consumption pack also has come off slightly in the last 1 hour. You have metals, which has been a downer, along with oil and gas and IT and defense. In fact, for the week as well, IT has been one of the losing sectors, as we see, along with the energy index. Let's look at the advanced decline ratio, and you will have the broader markets as well as we close. If you see in terms of the advanced decline ratio, there you go. The mouth has opened wider, your declines 1700. We started off at around 1600 odd declines, but that has, so we are almost double in terms of the declines versus the advances. And if you have to look at the broader markets as well, the pressure has continued at the day's lowest levels on the mid cap and small cap. Clearly, we've seen profit booking in today's session on the back of the long weekend, and you're talking about the Sensex monthly expiry as well. So that's what has led to a closure around that 24,052 mark as well. But completely out of time. Thank you, viewers, for watching. Thank you from Sharad, the team that put the show together, and myself on India Market Close. In fact, lots more lined up on the other side. Please stay tuned and happy long weekend.
India Inc.'s most respected.
Hello and welcome to NDTV Profit. You're tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Crypto markets fall on Bitcoin-led sell-off. CBOE weighs perpetual Bitcoin Ether futures. Digital Euro passes key parliamentary vote. Bally Gifford launches UK's first native tokenized fund. Well, those were the top crypto headlines at this hour and how you should navigate your digital assets, managing your risk and spotting the next big trend. Let's hear it from Ashish Singhal. He's the co-founder and CEO at CoinSwitch on how Indian investors are maturing and what makes it to their radar.
I think Indian investors, especially in the crypto sectors, have evolved a lot. Earlier, you will see that in 2020, once the RBI ban got reverted by the Supreme Court, a lot of retail users shows the enthusiasm to get into the market. These were, first-time crypto investors learning about crypto. Crypto market was in a bull cycle, so a lot of users came in with the intent to make money in the market and kind of knew crypto to an extent, but didn't understand it fully. Right? The market was good, so everyone just jumped in. Right? But over the last 4 or 5 years, what has happened is the market has matured a lot. Today, we not only see retail investors, we see businesses, we see HNIs, we see family offices now, allocating to crypto as well. Almost 2 to 6% we have seen people allocating their portfolio into crypto. The question which used to be asked earlier that, is crypto a good investment for me? Has changed totally to how much of my portfolio should be in crypto, right? So the question of whether crypto should be an asset class has gone away, and it has now become how much of a crypto a person should own, how much of a crypto portfolio should an individual or a family office should own, right? So from the maturity standpoint, it has evolved a lot. Even retail users within the ecosystems have matured, understood that it's not a short-term investment, and a long-term investment.
That's pretty interesting. Time now to track how the investor behavior has changed over time. Here is his take when it comes to how that trajectory has shaped up.
So if you look at, early 2020, so a lot of investors didn't really understand crypto that much. They saw that, there is a new market that is coming in. Since, till 2020, they couldn't really get into crypto while the entire world was getting into crypto, mashed by, the COVID, due to which all financial assets were doing very well. They got into the crypto with an idea to make money faster, right? But over time, they understood the value of crypto. They understood how blockchain really changes the dynamics, how tokenization make, any financial asset easy to invest in, but also make it auditable, it make it trustworthy, and increases the participation of the entire ecosystem, right? So they've seen the value of blockchain delivering across the financial ecosystem, and that's where the trust on the ecosystem has gone up. Even when today the markets are down, we see a lot more people doubling down on crypto, averaging their cost and making sure that they are here for the long run. And what they used to do earlier, invest a lot in smaller coins, meme coins. I think the trends are changing now. People are trusting Bitcoin, Ethereum, Solana, like top tier A coins much more than the middle tier or the lower tier coins, right? So the intent is very clear. They users want to invest in what has already been proven in crypto. Their psyche is not just about making money in the short run, but also how do they consistently allocate their portfolio and build for the long run and make crypto a long-term investment rather than a short-term investment in their portfolio.
So that's an important takeaway coming in from Ashish. But as we wrap, remember, you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome to what is going to be a very exciting show. The Business Leadership Awards are back after a 13-year hiatus on NDTV Profit, and on the 26th of July, we will honor India's finest business minds. They will all come together to choose the leaders who are shaping the country's future. Guys, you know what's so exciting about the Business Leadership Awards and the way we managed to put it all together is the stellar jury who's come on board. And in the jury rounds that we had with Sunil Bharti Mittal, Noel Tata, and that exemplary jury, it was clear that their attention to detail is so focused. The questions they asked us, it's amazing.
Give us a snippet of that, though. What are some of the questions that you got?
So, for example, on methodology, for example, on are there any past reputational risks for the nominees, all of that. But this is going to be an exciting show because we're going to hear for the first time who the nominees are.
Yes, indeed. And we are going to hear the nominees, but also just the other aspect that the nature of the jury and the combination of the jury, Tamanna, spans across business experience, nation building experience, and so much more. So in some sense...
Markets.
And markets, yeah. So fairly power-packed.
Yeah, so let us tell you a bit about the Business Leadership Awards before we unveil who the nominees are in all the categories, because this is going to be truly exciting. The Business Leadership Awards, of course, felicitates the brightest minds in business in India, those who've really moved the needle over the last year. And chairing our jury is Sunil Bharti Mittal, founder and chairman of Bharti Enterprises, the man who built a telecom empire that connected 1 billion Indians. It's not just him. Noel Tata, chairman of Tata Trusts, is on the jury. Cyril Shroff, managing partner at Cyril Amarchand Mangaldas. Kiran Mazumdar-Shaw, chairperson at Biocon Group. UK Sinha, former chairman at SEBI. Jayant Sinha, president at Everstone Group and visiting professor at the London School of Economics. He's also, of course, former union minister at finance and civil aviation. Ramesh Damani, value investor and member of BSE. C.S. Sethi, chairman of State Bank of India, was also there. Our partners and non-voting member was Sanjeev Krishan, chairperson PwC India. They've been our partners in everything that we've done. And of course, Rahul Kaval, CEO and editor-in-chief, NDTV Group. Just, to your question about some of the kind of questions we got, first of all, what was amazing is to get that kind of a jury and sync their calendars. Some of them were in different parts of the globe. They came on, and very pertinently, why this one, why not that one? Why this kind of a methodology, why not that? And it was after agreement that we came to this, which is why it's so important to understand how we've done this in a transparent manner to really honor the best of the best.
Sachi, just before we get to the nominations, what is the one defining factor of these awards for each of us? And Tamanna, let me start with you. What is that one defining factor that makes the original Business Leadership Awards truly different?
So, for me, it is that we removed subjective opinion out of it as much as possible, because that's what happens with these awards, right? You wonder, why has someone been given an award? It is based on data. There's credible data. We've gone back, we've looked at the data, we've crunched it that way, and we've had a partner with the caliber of PwC who's put their stamp on it. So the last thing that should come to mind is why this one and why that one. Is just the data doing all the talking.
And for me, it was all kind of categories: contemporary, traditional, as well as what is futuristic. So in some sense, I think we've been able to cover almost all aspects, if not all aspects, of what business leadership should be about.
And you're trying to award someone who really deserves it, because as Tamanna was mentioning, the methodology where it's given weightage to what really deserves it. I mean, it's not a methodology that has fitted all the categories together. Every category has a different kind of a methodology that has been used.
Yeah, and for me, I think more than anything else, at a time when we're talking about AI adoption, one of the categories captures that in a very interesting manner, and what went into the selection of these people actually stood out to me.
Should we get to the awards then?
Yes.
Should we get to the nominations?
Yes, we should. This is the exciting thing. People have been asking, who are the nominees? Well, why don't you start it off, Neeraj?
Yeah, let me unveil. And it's apt that the first category is the business leader, who's the AI champion, a category that goes beyond numbers, because this is a qualitative call on the most impactful AI players today, from large language models to the infrastructure powering AI and companies scaling real world applications. We capture the full stack. The idea is simple: who is building, who is enabling, and who is delivering AI at scale. These are the names defining the next phase of the AI revolution. And the nominees are Sarvam AI, building India's answer to global AI giants. NESA, creating the critical GPU infrastructure powering the nation's next generation of AI innovation. Fractal Analytics helps place Indian AI expertise on the global map through innovation-led problem solving. Cure AI, using AI to detect disease before symptoms become fatal. And Karya, building an ethical model that empowers underserved communities while creating high-quality AI training datasets. And Emergent, redefining how applications are built in the era of autonomous AI. Well, guys, you need no further.
How exciting was this? I must say, this is one place where the jury really did a lot of deliberation and discussion, and it was eye-opening for us to see that those at the top of the ladder of corporate India are so clued in to what is going on in the world of AI, to be able to differentiate between claims of AI and actually doing something.
That is the point, and that's what I want to know, because you've been part of this as well. You heard some of that deliberation. I'm most curious to understand, a lot of companies are trying to rubber stamp AI and saying we're also doing AI. So what were the kind of questions that were asked to say these are the guys that need to be in that room and in contention?
So a lot of scrutiny, and in this one category, I must say, something that went into it is also looking at the impact of that innovation. AI is right now over the world being looked at through the lens of profitability, and that's important. But impact, Atmanirbharta, what it's doing for the country was also definitely in play.
And it's not directly that it's all our LLMs only, right? There are a couple of companies who are looking at AI which could be an overlap on the LLM, which is more beneficial as well. And that's what India is all about right now in terms of the addition, the third wheel, you could say right now, that in terms of AI that India becomes.
Slice of the cake,
which
right,
slice
as
of
it's
the
called.
cake. Yeah, absolutely. And again, it's more qualitative right now in terms of where AI as a category goes. But the next one is very interesting. We're talking about the next category, which is all about Atmanirbharta. It's awarded to an enterprise that has strengthened India's self-reliance by building indigenous manufacturing, deep tech capability, healthcare, or industrial independence. In fact, reducing import dependence is also one of the criteria here, and establishing a globally competitive Made in India excellence brand. And the nominees for these are, the first one, ONGC, Tata Electronics, HAL, Dr. Reddy's, and Wockhardt from the pharmaceutical space.
You know, this is, I just want to say a word about this category, because Neeraj, you asked in the beginning that what sets this apart. And when the NDTV team came together to think about what is differentiating in the Business Leadership Awards, it is to underline this, the need of the hour for this nation and those that have served that need. So which is why this becomes a very, very important category.
Yeah, particularly what is happening in defense and otherwise. But it's not just defense. That's the one that everyone focuses on, but what's beyond that is
but even
important.
in pharmaceuticals, the fact
we are innovating.
The fact that we have those who have crossed new bridges and broken ceilings in innovations in pharmaceuticals, that makes it so exciting.
Yeah, and that story that has emerged over the course of the year to say that India is not just the manufacturer of pharmaceuticals, it's actually at the cutting edge of developing new formulations that is changing the landscape for how India is viewed in the pharmaceutical industry. But moving on to the next category, this is the Business Leader of the Year in the public sector space. The evaluation begins with the top 100 companies by market capitalization as of the 30th of April 2026. Forming the screening universe is, of course, from each of those, you have companies that are assessed on 5 equally weighted parameters. You're ensuring a balanced view on growth, scale, market performance, and these include revenue compounded annual growth rate, profit growth rate, price performance, along with average revenue and average profit, with each metric carrying a 20% weight. And all those calculations are based on a 3-year period. And the framework actually ensures that we recognize consistent performers in the public sector that are delivering both financial strength and shareholder value. And these are the nominees. From strengthening India's maritime capabilities to building a globally respected shipbuilding enterprise, this nominee has steered a strategic national champion to new heights. Captain Jagmohan, the Chairman and Managing Director of Mazgon Dock Shipbuilders. The next one is equally interesting, leading one of India's energy giants through a period of transformation, growth, and evolving consumer demands. This nominee has balanced scale with strategic vision. Manoj Jain, the Chairman and Managing Director of BEL. Revitalizing cornerstone of India's
industrial ecosystem. This nominee has championed execution excellence as well as renewed growth. K. Sadasivan Murthy, the chairman and managing director of BHEL, driving the transition from power generation leader to energy transition champion. This latest nominee is helping shape India's energy future. Gurdeep Singh, the chairman and managing director of NTPC. At the helm of India's energy exploration, this nominee has led with resilience, scale, and strategic foresight in a rapidly challenging and changing global landscape. Arun Kumar Singh, the chairman and chief executive officer of ONGC. What a lineup.
You know, so just want to talk a bit about why we have a separate category of business leaders for public sector and for private sector, because we have a specific methodology, right? And market cap is a big part of it. We also have to recognize the role of public sector enterprises and what they've done, not just for investors, but for the economy and how they've zoomed ahead. So which is why we have those two categories. A lot of exciting ones coming up. And the next one that I'm talking about and revealing the economies is one which has been hitting the headlines. This category of leaders have been hitting the headlines more often than not. This is the new economy leaders category. For this, we pick companies that were listed between April 1st, 2021 and March 31st, 2023. The new age names that have been tested in public markets is how we have raised that bar. The evaluation uses a balanced, data-driven framework with equal weight across 5 parameters, which are revenue growth, profit growth, stock price performance, average revenue, and average profit, each accounting for 20%. All metrics are calculated over 2024, 2025, and 2026. Now just look at what you're seeing on your screen. 2026 has been given the most weightage, then 2025, and then 2024. The reason for this is to also identify leaders or companies that have performed well more recently. So it's not just debut momentum, but sustained performance across growth scale and market returns that we've taken into consideration. Now, having said that, here are the nominees for this category, which is a very exciting one. The first nominee is Eternal, pioneered food delivery and building a multi-vertical consumer internet powerhouse. Policy Bazaar brings transparency to one of India's most complex industries, transforming insurance from a product sold to a decision informed. Nykaa, a category-defining consumer brand, reshaping how millions of Indians discover, shop, and engage with lifestyle products. Cartrade, tech-streamlined vehicle discovery, transactions, and ownership across the automotive ecosystem. Delivery redefined supply chain efficiency through technology, scale, and relentless execution. This is clearly an exciting category and also recognizes the big change in the way consumers are going out and looking at various services and products.
And a category that took advantage of the Jam Trinity to the fullest, right? I mean, they built out products which are now almost on all of our phones, the apps.
Yeah. The post-COVID boost also gave them this huge tailwind coming in.
And it's across sectors. I mean, it's not only consumption, which is, okay, you can talk about FMCG, you're talking about the financial side of it as well. You can talk about auto. Every sector has started to build that new age economy now.
And it's also amazing how the behavioral changes of how consumers are consuming all of this is coded into the way that they're doing business.
But tell you what, guys, nothing happens without finance, right? And that's why the next category is so important, right? Onto the financial powerhouse category, the term is perfect. This award recognizes top performers across the BFSI space with a clear split between public and private sector players, and rankings determined within each segment. The evaluation follows uniform data-led framework with equal weight across 5 key parameters. These include revenue compounded annual growth rate, profit compounded annual growth rate, and the stock price performance, along with average revenue and average profit, each contributing 20% to the overall score. The framework ensures fair comparison, identifying institutions that deliver consistent
growth, strong profitability, and sustained market performance within their respective segments. Now, having looked at the evaluation methodology, here are the nominees. Punjab National Bank, a banking institution woven into India's economic fabric for more than a century. Indian Bank, combining a strong legacy with disciplined execution. Union Bank of India, with a nationwide footprint and a growing digital presence. Power Finance Corporation, financing the infrastructure behind India's growth story. Canara Bank, one of India's most enduring financial institutions. And you can never take State Bank of India out of the equation, the backbone of India's financial system. Of course, following it is Bank of Baroda, blending global presence with domestic strength. And the nominees for the Financial Powerhouse of the Year in the non-PSU category are Shriram Finance, built on deep customer understanding and an unmatched presence beyond India's metros. BSE, the institution that helped curate India's equity culture. ICICI Bank, a pioneer in modern banking, combining innovation, digital leadership, and financial performance to stay ahead of the curve. Axis Bank strengthens its position as one of India's most dynamic and customer-focused financial institutions. Cholamandalam Investment and Finance built one of India's most respected NBFC franchises, and there is no doubt around that. And Bajaj Finance, redefining consumer finance through innovation, execution, and most importantly, scale. And you can never leave out HDFC Bank, a benchmark for excellence in Indian banking.
So here, once again, just to underline the point that there are two segments to this, PSU and non-PSU, to recognize and highlight the role that PSU wealth creators and financial institutions have come in with, which have just zoomed and are at the forefront. Gone are the days when PSU financial institutions were looked at as laggards in any way.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers.
You cannot really ignore the investors here, right? I mean, this is a category which is actually something which will be watched out by investors because these are the wealth creators. Yes, the next category is the wealth creators category. This one actually tracks companies that have consistently delivered both growth and shareholder returns. We've actually filtered for businesses with a minimum 5-year listing track record, revenues above 2,000 crores, and the ranking is balanced but clearly market-driven, with price performance carrying the highest weight at 50%, while your revenue and profit growth each get 25%. Now, the evaluation period runs from FY22 to FY26, capturing sustained wealth creation over time. So all you long-time investors, wait for the nomination. BSE enables capital formation to create wealth for generations of investors. Transformers and Rectifiers, the company which has transformed engineering expertise into one of the most compelling growth stories. MCX India transformed market participation while delivering exceptional value creation. Himadri Specialty Chemicals, the company has actually leveraged innovation in specialty chemicals and advanced materials. Gallant Ispat, a story of manufacturing scale and disciplined execution that has transformed industrial capability into sustained growth. We have Garden Reach Shipbuilders. They've come ahead and combined strategic national importance with operational excellence. Newland Laboratories built a differentiated pharmaceutical business, creating lasting investor value. This also is very interesting because you're seeing multiple companies from different sectors that have actually created value,
and we
right?
haven't just done, 5-year return and then that's it.
Yeah.
We have added the kind of methodology which makes it an extremely interesting category to see.
Yeah.
I'm excited to see who wins.
All right, so those are, and quite a few of them have been listed for quite some time. But what about the relatively new kids on the block? How much wealth creation have they had? That's up next, the IPO of the Year category. That spotlights the most impactful listings of the recent cycle. We're looking at companies that hit the markets between January 1st of 2024 and December 31st of 2025. The evaluation blends both the demand and the delivery, with offer size at 20%, institutional and retail appetite accounting for 30%, and market performance taking the center stage. In fact, annualized returns since listing till March 31st, 2026 carries the largest weightage at 50%, making this a true test of post-listing wealth creation. Now, you're probably wondering which of those IPOs that you subscribe to make it to the list. Let's talk about the nominees in this category. Meesho, a listing that showcased the strength of India's digital consumption story and the growing maturity of its startup ecosystem. Grow, bringing one of India's most recognized fintech brands to public markets, this nominee captured the imagination of a new generation of investors. ICICI Prudential AMC, a landmark listing that heightened the rapid evolution and growing importance of India's asset management industry. LG Electronics India, one of the year's most anticipated public offerings, combining global brand with a deep consumer trust in India. Lenskart, a category creator that successfully translated consumer leadership and innovation into a compelling public market debut. HDB Financial, one of the most anticipated public offerings in the financial sector, which brought a scaled lending franchise and deep retail reach to public markets. Tata Capital, a landmark listing from one of India's most trusted business groups. This nominee captured investor attention with its diversified financial services platform and strong growth potential. Exciting, right?
Yeah, completely. You know, what is also exciting about these awards is the differentiated kind of categories that we have seen, right? You've had the Atmanirbhar category. The next one, I think, is such a crucial one from the perspective of a responsibility we all as humans hold, which is to be green champions. And we want to recognize those businesses that have been green champions. This category recognizes companies that are setting the benchmark on sustainability. These are Indian corporates that rank in the top 1% globally in the S&P Global Corporate Sustainability Assessment for 2026. In other words, businesses that are not just delivering growth, but doing it with global leading environmental, social, and governance standards and are environmentally responsible at their very core. So let's take a look at the nominees for this year's Business Leadership Awards for Green Champion. Lupin has demonstrated that healthcare leadership and environmental responsibility can advance together through measurable, sustainable outcomes. Tech Mahindra embedding sustainability into every layer of its business while driving responsible growth across global technology markets. Godrej Consumer Products combining purpose with performance. This nominee has emerged as a leader in responsible consumer goods manufacturing. Godrej Properties setting new benchmarks for sustainable urban development while reshaping India's real estate landscape. First Source Solutions integrating ESG principles into business strategy and proving that responsible growth can also drive long-term value creation. And the Mahindra Group, a pioneer in sustainable business practices. This nominee continues to lead through innovation, climate action, and measurable impact.
You know why I think this category is as difficult to choose as an AI thing? Because every company is going AI way, every company is going the green way as well. So everybody is doing it and everybody believes they are doing the right thing. To choose from amongst that is such a difficult task. So I love the nominations that have come up.
Yeah, and exciting ones that have come up as well, again, across sectors.
Yeah, most certainly. And well, to the next category, and everybody wants to be that, right? Which is be a reformer. And that's the next category, the Reformer of the Year, celebrating those reformers whose initiatives have led to tangible outcomes, such as accelerated infrastructure development, improved ease of doing business, digital transformation, stronger public service delivery, investment attraction, employment generation, or greater transparency and accountability. At its core, the Reformer of the Year is awarded to a leader whose actions have helped reshape the future trajectory of a state, a sector, or the nation through policy innovation, execution, excellence, and transformation, AI governance, or transformational governance really as a whole. And the nominees for this category are Mr. Ashwini Vaishnav, Union Minister for Railways, Information and Broadcasting, and Electronics and IT. He introduced a structured 52 reforms in 52 weeks program to modernize Indian railways with enhanced efficiency, digital services, passenger-centric policies, and cargo logistics reforms. Yogi Adityanath, Chief Minister of Uttar Pradesh, a prominent political figure and Chief Minister of Uttar Pradesh since 2017, becoming the state's longest-serving Chief Minister in modern history. Devendra Fadnavis, Chief Minister of Maharashtra, a seasoned Indian political leader serving his third term as Chief Minister of Maharashtra. As the CM, he has been instrumental in pushing major infrastructure and governance initiatives in Asia's most industrialized state, including advancing transformative projects. N. Chandrababu Naidu, Chief Minister of Andhra Pradesh, in his current term, Mr. Chandrababu Naidu has positioned Andhra Pradesh around clear development metrics, accelerating industrial investment, improving ease of doing business, and expanding infrastructure-led growth corridors. Himanta Biswa Sarma, the Chief Minister of Assam, the dynamic Chief Minister of Assam, having led the state to a third consecutive electoral win and the second as its Chief Minister. His tenure is marked by bold policy initiatives and administrative reforms that strengthen governance and socio-economic development.
You know, what a crucial category this is. And it also shows that the difference that politics can make in governance and changing and moving the needle for states and at a central level.
You know, whilst we're talking about, everyone who's looking at reforms across, this category is very interesting because they're contributing as well to see how we can actually get everyone at par to some extent. And this is the next category, that is Philanthropist of the Year. This award honors an individual or family house whose philanthropic contribution has delivered measurable, transformative impact across education, healthcare, climate action, civil society, public welfare, and actually demonstrating leadership beyond just profits. Our nominations are Shiv Nadar, donated 2,700 crores and he's topped the Hurun list for the fourth time in 5 years. Azim Premji donated 147 crore rupees through Azim Premji Foundation in FY25. Nandan Nilekani and Rohini Nilekani, they've jointly contributed over 500 crores towards climate, education and civil society. And the young kids on the block, Nitin and Nikhil Kamath, frequently recognized as the youngest philanthropists for their 147 crore rupees contribution through Rain Matter Foundation. Sushmita Bakchi, she gave away 90 crore rupees to healthcare in Odisha. You know, at this category as well, it's interesting to see you just don't have the ones who've been there, right? All your new kids on the block who have been earning that quantum have started contributing, which is a very good sign.
It is. And this is certainly a category to watch out for. And the next category is equally interesting from the perspective of what they've done and the promise that they have going forward. Women leaders who have shaped major sectors of the economy through scale, innovation, and sustained commercial success. And the nominees are Gitanjali Kirloskar, CMD of Kirloskar Systems, a pioneering industrial leader advancing the legacy and future of one of India's great engineering institutions. Roshni Nadar, the chairperson of HCL Tech, represents a new generation of Indian business leadership that combines technological scale, strategic national relevance, and institution building with long-term vision. Falguni Nair, the chief executive officer of Nykaa, a founder who built a multi-billion-dollar consumer brand from the ground up. Malika Srinivasan, CMD of TAFE, a manufacturing leader powering India's agricultural and industrial growth. Vibha Padalkar, the managing director and chief executive officer of HDFC Life, a financial services leader expanding insurance access and strengthening financial security for millions of Indians. Prabha Narasimhan, MD and Chief Executive Officer of Colgate-Palmolive, a trailblazing leader redefining growth and innovation in India's fast-moving consumer goods industry. So it's such a beautiful panel, right? In terms of just the work that they've done, and I think the excitement, like I said at the start, is what they will bring to the table going forward.
Oh, a lot of them have already, been at the top of their game, and it's a recognition that deserves to be there. All right, let's go for the big one. You know, this feels like one of those award functions, and you want to hear the big reveal right at the end.
Where's the drum roll? Cue it.
I think we'll have to do it ourselves. That's the drum roll coming in. Okay, this is the big one. Moving on to the Business Leader of the Year in the private sector. We looked at the top 100 companies by market cap as of April 30th, 2026 as our screening universe. Each company was then evaluated across 5 equally weighted parameters at 20% each, which ensures a balanced view of scale, growth, and market performance. So what are those 5 parameters? Revenue growth, profit growth, stock market performance, along with average revenue and average profit. So each of those parameters holds 20% in those categories. So here you are recognizing the leaders who have taken it forward. Transforming a legacy conglomerate with sharper focus, stronger returns, and disciplined growth. And the nominees for Business Leader of the Year in the private sector are a man who's transformed a legacy conglomerate with sharper focus, stronger returns, and disciplined growth, Dr. Anish Shah of the Mahindra Group. He's driven innovation, global expansion, and EV leadership. K.N. Radhakrishnan has accelerated TVS Motors' growth journey. The architect behind India's retail success story, scaling brands and delivering exceptional growth at Trent, P. Venkatasalu is our next nominee. From cables to electrical leadership, Inder Jaisanghani has powered Polycab's rise into an industry powerhouse. And advancing global healthcare through innovation and execution, Vinita Gupta continues to strengthen Lupin's international footprint. He's a visionary who has transformed a homegrown manufacturer into a global mobility powerhouse, Rajiv Bajaj of Bajaj Auto. And steering India's largest car maker through a new era of growth, innovation, and mobility transformation, Hisashi Takuchi of Maruti Suzuki, leading India's engineering giant with scale, ambition, and execution excellence, S.N. Subramanian of Larsen & Toubro. This is the big one and the exciting one. Can't wait to see who wins.
And so difficult to choose. All of them
Luckily,
exemplary leaders.
that's the jury's job.
No, Raja.
They had to ponder over this, so that made our work easy.
Yeah, as also the next one, simply because India is such a great era of astonishing business leaders. So to choose people who are in the category of receiving the Lifetime Achievement Award, guys, I mean, how easy or how difficult it can be, it's left to anybody's imagination, right? It honors, this award, viewers, honors an individual whose leadership, vision, and enduring contribution have fundamentally shaped Indian business, industry, or institution building over multiple decades. This recognition celebrates a legacy that extends beyond commercial success, acknowledging leaders who have created long-term value, influenced industries, built enduring enterprises, inspired future generations most importantly, and contributed meaningfully to India's economic and corporate evolution. And the nominees are A.M. Nayak, Chairman Emeritus of Larsen & Toubro, a visionary industrialist who helped build the engineering backbone of modern India. Kalpana Morparia, distinguished Indian banker, one of India's most respected banking and financial services leaders whose career has been defined by institution building, regulatory depth, and the strengthening of India's corporate and investment banking ecosystem for several decades. Dilip Shanghvi, founder of Sun Pharma, one of the most influential architects of Indian pharmaceutical industry. Arundhati Bhattacharya, President and CEO of Salesforce. Arundhati Bhattacharya, President and CEO of Salesforce South Asia, recognizing her commitment to governance, modernization, and public financial infrastructure. Mr. Harsh Mariwala, founder and chairman of Marico, a visionary entrepreneur who transformed a family business into a global consumer powerhouse. Well, guys, I can't wait for July 26th. It promises to be an evening of spectacular business glamour.
So let me just, as we wrap up this nominee reveal show, let me just leave you with one more reveal which is going to come in the next few days about all of the luminaries who will be attending the show. This is really an exciting one.
Okay.
So wait and watch for that. There are more reveals now.
Somebody that we know?
I think you will.
Okay.
I think you will.
Okay. That's something to look
And what's
look
interesting
forward.
is, I think, the quantum of market cap that's going to be, the diaspora that's going to be present there.
In that room.
Yeah.
No, it's also exciting because, I think it's about time we recognize the value that this cohort of people bring to the table.
Absolutely.
The passion they have for improving lives and improving what's happening to the nation that they are in. It's truly inspiring to see. So this is just a curtain raiser. There is going to be so much to come over the next few days across the NDTV network. You will see more details about the nominees and the categories that we've laid out for you. Stay tuned to this space for so much more.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Right here on NDTV Profit, a very special guest to talk about a lot of things as the macro issues for India are just receding. Sajid Chinoy, Chief Asia Economic Research at JP Morgan, joins in right now. Sajid, such a pleasure having you, and I hope all is well. Thank you for taking the time out and being with us today.
It's a pleasure to be here.
Yeah, no, the pleasure is entirely ours. Now, Sajid, this conversation was long pending, so I'm going to start with the key thing that happened in the last 2 or 3 months. And one could argue that the conflict was the key thing, but one can also argue that in the last 2 weeks or 3 weeks, the response mechanism of the government and the Reserve Bank of India has stood out. Right now, I read in a column that you wrote that the RBI needed to do something, some measures in order to stem the consistent downtick that the rupee was going through. They've done that. The government has played its part as well. Are these stopgap arrangements at best, considering the current issue? And do you think more needs to be done now while the opportunity still presents itself?
Okay, that's a great set of questions to start with. So I think we have to look at this across 2 horizons. A near-term firefighting 3, 6, 9-month horizon, and then a more 3 to 5 year horizon. I think the need of the hour a month ago was to stop the self-fulfilling spiral that the rupee market had gotten into. Now, of course, if you step back, we came into this, the shock, the Middle Eastern shock, on a good wicket when it came to growth and inflation. We were in the middle of a nice cyclical pickup. Inflation had gapped down sharply, so the economy was well positioned to handle this from a growth inflation perspective. Where the weak link was on capital flows, as we have been writing. That essentially, as US rates have gone up the last 3 years, capital flows have dried up, especially FDI. So the prospect of a much wider current account deficit because of higher oil prices and the fact that capital flows had dried up meant that the rupee had to be the shock absorber. That was the right thing to do from the central bank and the government's perspective. But when it was the only instrument being deployed, there was a concern that the rupee would need to weaken dramatically to close the BOP gap. That's when weakness begets more weakness. And we saw a situation in the month of April and May when forward hedging began to pick up very sharply. And the worry was that if investors, if corporates, if importers worried about the future value of the rupee, they would begin to hedge their stocks. FDI stocks, ECB stocks, FPI stocks. These are large quantums. Now, when you hedge, you put more pressure on the rupee. And when the rupee weakens more, there's even greater desire to hedge. So that was the self-fulfilling spiral that we got into in March, April, May. And therefore, we had said that what was needed was a circuit breaker. In the event, the RBI provided a bazooka of a circuit breaker. I think the forward swap terms that the RBI provided were much more generous than markets had expected. And so the expectation is over the next 3 months and then over the next year, a large quantum of capital flows can come in because of the inducements that were given. NRI deposits, PSUs borrowing in dollars, and then the hope that by 2027, the fact that withholding taxes have been taken away means India will qualify for the Barclay Bloomberg Index. I'll make 2 quick points. But those flows will come in the coming months. What was needed was to change the market perception. And already we've begun to see that. I'm going to give you 2 data points to support that. When you look at the CCIL data of forward hedging, there's this huge spike that happens in March, April, May. Look at the last 3 weeks, and this is completely unwound. So the measures announced by the RBI were successful in changing market expectations of the rupee, which then becomes self-fulfilling. That is reflecting in how the rupee is responding to the other big shock. So there's relief from the Middle East and from oil prices, but there are 2 other shocks brewing. The other shock is one of higher US interest rates, where now Fed hikes are back on the table, and we've seen the dollar index being at the highest level in more than a year.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I'm looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're...
Hello and welcome to KYC, and you're watching NDTV Profit with me, Sharad Dubey, and this is a very interesting show where we get you the most interesting companies and also the companies which are buzzing as well. But before that, let me give you some hints. try to guess this company. There are 3 hints which will come on your screen right now. It's a Hyderabad-based packaging company. It's an old listed company, nothing new about it. A company deals with the rigid plastic packaging solutions, and from the March lows itself, we have seen a significant up move coming in. Try to guess it. I'm going to give you some time. Well, yes, the company in focus is Moltec Packaging. This is the company which we are getting in KYC today. But why are we getting this company? That's the big question to be asked. There are a lot of questions there. Of course, recently they had come in a conference also where the bullishness was coming in from the analyst community. But remember the raw material prices, they were at once very high. There's a crude derivative angle as well. Now that has come off. So we'll try to understand the question. What's the margin outlook going ahead? What's the volume growth guidance across various sectors in the company is actually functioning? So we'll try to understand the overall momentum from this space, and of course the client confidence. This is very much important to track. The segmental performances. Are all segments firing cylinders, or is there some drawback? We'll try to get more about that from the management as well. Apart from that, the margins and the revenue outlook for FY27 is something which we'll talk about, and any new strategic tie-up or a new product in which the company is entering, that is where the focus will be. But enough of the questions. Let's try to understand, what's the entire story about Moltec Packaging. Let's start with that. What's about the company? It was established in the year 1986. It's Hyderabad-based company and it was listed also in the year 1993. So pretty old track record which the company is having. It's one of the largest players, you could say, in the rigid plastic packaging industry. And if you look at more details here, they have lubricants, paints, food, and even pharma. So 4 important sectors where the company is focusing on. Looking at the total manufacturing sites, इनके पास लगभग 10 manufacturing sites हैं और 2 stock points हैं. The installed injection molding capacity that comes in at 63,000 tons per annum and 175 plus injection machines. But let's look at the major customers. Customers are pretty big, be it the consumption names and also you could say the pharma names. We have Asian Paints, Castrol, Shell, Mondelez, HUL and even Nestle. These are the important clients for Moltec Packaging. So that's pretty much interesting that they have got, you could say, a very strong set of customers, and whenever these customers also move positively, of course the second order effect comes in positively for this company as well. But let's look at the FY26 performance, how things have moved ahead. And looking at it, the EBITDA per kg, that's the operational number to track, that has gone up 8%. And even if you look at the sales volume, that seems to also jump by almost 11.4%. Interesting, right? But let's go a little bit more deep into it. There are 3 segments: paints, lubes and form and fill, FNF as it's called. Largely paints is having 43% revenue contribution coming in, while form and fill is 41%. On the whatever is left, 16% comes from the lube segment. But apart from the revenue breakup, let's look into the revenue growth. What has happened in the 4th quarter? What's the report card stating? Paints is up 24%. FNF segment is up almost 25%, but concern is in the lube segment. That's negative. It's down 9% on a year-on-year basis. But our thesis is what may work for the company. Why are the analysts talking about it? Why are they turning bullish in the recent conference? That's where my interest came in this counter. And you see largely the pharma packaging, that's expected to pick up because a lot of, you could say, inspections are getting over for pharma companies. And once that happens, the second order effect starts coming. ये company packaging बनाती है तो pharma players को approval आया और उसके बाद the sector is out of favor. The sector is out of favor on the Lal Street. That's also one concern. So it's a cyclical play, and right now packaging stocks, there isn't much premium being given in the markets for these counters, and my concern comes is there's a lack of analyst coverage also. So that's the key, takeaways why the things might not work for the company. But let's try to understand the entire ratings. How do you give a company the ratings? There's income statement, balance sheet, cash flow. ये सब आप देख रहे हैं, ये जो है, these are the core stats coming in, and looks like the company is evenly placed. 12-month trailing P ले लीजिए, 32 times पे Moltec Packaging आ रहा है. Jindal Poly, TCPL, they range between 27 to 49 times. Uflex is so down. It's 10 times it's trading, and on the other hand, Polyplex is up 83 times. So there is no proper clear industry valuation coming in. One of the reasons why it's out of favor, this entire industry as well. So concerns definitely comes, but at the middle of it is the company which we are analyzing, KYC. So I'm going to give this a neutral rating as well for valuations, but outlook is something which I liked. Management has stated they go with that 15% revenue growth. They're confident of crossing the 1,000 crore revenue mark by FY28. There's a consolidation happening of almost 5 units in Hyderabad. A couple of units from Aditya Birla Group also. Grasim इनका client है. Capacity utilization बढ़ने वाले हैं इन plants का. And there's two important things to say before I close the outlook is the Panipat plant in thin wall and square pack. That is where the sales growth is happening. That's mentioned in the presentation. Whenever you analyze companies like that, be very thorough with your income statement, balance sheet, press release and investor presentation if you are a new analyst and watching this show. But as of now, outlook is strong. Let's give you the entire ratings of how things actually pan out. Largely, we see nothing major is happening in most of the criteria which we are discussing. Return ratios, there is a pressure, but the outlook, that is where I feel there might be some alpha to be made going ahead. Because of that, I'm going to give this company a total rating of 4 out of 8. This is largely in line with what generally we give to a company in this segment. We are joined in by Lakshmana Rao Janu Mahanti. He is the founder and CMD of Moltech Packaging. Good afternoon, Mr. Rao. It's always a pleasure to have you with us at NDTV Profit. Just discussing about the raw material prices, how volatile it has become. Once it went up to 120, now below that 80 mark. How does it impact your company? And going ahead, how do you hedge all this volatility? Well, it seems like there is a little bit of technical error. Mr. Rao, if you could reply on how the raw material challenges the company is facing and how you are hedging it.
Yeah, raw material prices have shot up in the month of March, but starting now, I hope it will start coming down. But we could successfully pass on the price rise to all the clients across the board, all segments, right in the month of March itself.
Fair enough. But let's go a little bit deeper into that volume growth, how those numbers are looking like in the first quarter, and going ahead, how's the client confidence? Is it coming back from your domestic clients and international clients? How's the client confidence looking and the volume growth outlook?
We are closing the quarter very few days down the line. So I can't give that, but I'm very happy with the numbers that are happening. And especially in the paint, food and FMCG, especially in pharma, our growth numbers are, as per my guidance I given at the end of the Q4. And only in the field of lube, due to couple of major players have base oil supply issues during last 2 months, there's a dip in their volumes in lube segment. Overall, I'm very happy the way the company is performing, and I'm sure to impress you with the results beyond my guidance given in the Q4.
And the segmental performance outlook, do you think the Q4 numbers, how it is looking, it will sustain going ahead, or the lube business will be under pressure in the first quarter also?
No, fortunately for us, all these sectors have did well other than lubricants, especially the high value add products like food and FMCG. The growth is in high double digits. And in pharma, it is more than 50%, which is a major contributor towards EBITDA. So EBITDA numbers will be definitely surpass our estimates.
A little bit of consolidation is also happening for your Hyderabad plants, and there's Aditya Birla Group's plants as well. So when this happens, and I know your company is backward integrated also, so for a packaging company, all these important points as a student of markets or someone tracking the packaging sector, I feel that the margins might go up going ahead. Just wanted to understand, is there any number or the growth in the next 2 to 3 years where these margins benefits start coming in? Mr. Rao?
You might have seen last year we did a very good jump in EBITDA margins thanks to better utilization and consolidation. But the consolidation benefit will accrue more in this year because last year it was hardly last 2 months we got the benefits. But this year, right from April, we will see the benefits of consolidation, which could be, I mentioned in my guidance last time, 2 to 3 rupees per kg at least. And with the increase in pharma and food FMCG numbers, we are aiming a good number, somewhere around 44, 45 for the full year. But definitely, as I mentioned in the guidance, minimum 42, 43 will happen even if adverse conditions continue. But as of now, for the Q1, we could do very well in pharma and FMCG, and with more accumulation of the pharma clients. Now more and more clients are giving us commercial orders. The quantities are increasing, and we have to ramp up the capacities during this year itself. And some of the machines and molds are online. And as we are also looking at other high value add products like injectable pens and also semiconductor tray packaging, we have started looking into. That is another area of future, not immediate, but as the semiconductor industry is going to boom in this country in the next 3 to 5 years, we want to place ourselves ready to make the very high precision tray packaging, JEDEC trays or semiconductor trays, which are...
Now, I have a follow-up question on the semiconductor as well. That's a very big, statement by you, and it completely changes the product profile, the margin profile of the company. I just wanted to understand a little bit more. Are you earmarking any amount for it? Is there anything special tie-up for this? Because this requires a lot of technical support, IP support as well.
Yeah, we are in touch with a couple of manufacturers in Taiwan and China. Because US companies are very huge and they're generally not really interested to partner with an Indian company. There are visits planned in July and August to Taiwan and China to meet some of the probable players who can give their technical know-how or even consultancy. We are talking with them, but it is very initial phase. It will certainly take a year or two to get into that, but our thought process is to get into more and more value-add products. Even in pharma, we are getting into eye drops segment, and we have plans to enter into devices and diagnostic products and widen our product range rapidly in the coming years. So while semiconductor is a different ballgame, it depends upon the way the chips manufacturing happens in this country. We want to tie up with a couple of them. We have initiated talks with a couple of semiconductor companies who are planning to set up shop.
So high margin business for pharma, then we have semiconductor also. That's pretty interesting. But let's go a little back towards the factories. Capex plans and expansion plans going ahead, for the next 2 to 3 years. Any amount is earmarked. What are you doing here?
So for this year, we have tampering down the capex. It will be in the region of around 90 crores, out of which 30 to 40 crores will be the maintenance capex, and the rest will be for pharma and these new projects what we are envisaging. Maybe trial molds for ophthalmic drops have been already successful. Now the commercial molds are getting ready. By December, we hope to get into market with that product range. And for the pens and devices, as I said, it is a 2-year plan, and probably in 28, we'll be able to come out with a model with a proper IP right and all that. So on these segments, we are at a drawing board stage now, both semiconductor trays and pens. I would not like to talk about those investments for the next 2 years at least. Probably in the year 27, 28, investments will start in those segments. And we don't have a rough sketch of the numbers that probably towards the end of this year we'll be able to spell out.
Mr. Rao, that's a pretty interesting take you have taken for the semiconductor portion. But I want to understand the debt levels also. What are the debt reduction plans coming in for the company? Or do you think that you'll be taking more of debt for these expansions? Because debt at times is a overhang in your industry. Just wanted to understand your view on that.
If you notice across the industry and different industries also, we have one of the lowest debt equity ratio. I think our borrowings are hardly 0.2 times or 0.25 times the equity. So debt equity is hardly 0.25, which leaves a space for borrowing when it is needed for big projects. But today, as I said, this year, 26, 27, the consolidation is more important, and bringing in numbers in Panipat, which is north area, and Cheyyar, again down south, is where we are focusing for the core business. And in pharmaceutical, we'll be entering into several new products, maybe in this year. At least 4 to 5 new products we'll introduce. And next year, we'll be focusing on different.
Right, Mr. Rao. Thank you very much for giving your time to NDTV Profit and giving us the entire 360-degree picture for Moltech packaging and that's pretty interesting. Folks, that's all for tuning in to KYC only on NDTV Profit, and for interesting stories like Moltec Packaging, where they're trying to talk about semiconductor or entering high margin pharma businesses, stay tuned with us. Bye.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.